Welcome back, everybody. We got Matty Money with us. He is not in a car this time. He is at his desk, and it looks like he rearranged the room a little bit. There's no more punching bag back there. Looks like we got a little mini fridge instead of the punching bag, which I kind of dig. I'm digging it.
Well, it shows you how much you're observant, Steve, because that mini fridge has been there.
What do you mean that mini fridge has been there?
The mini fridge has been there for about 2.5 years.
You got a punching bag there, sir. Maybe your mic was moved a little bit as you had a punching bag there, sir.
Well, I moved the camera a little bit, so it's facing a little bit more towards the corner.
All right. Well, please keep in mind, everybody, we're going to have some fun tonight. Sorry we didn't dress up for Halloween. I was going to get a milkman costume, but there's no excuse. I just got lazy and did not order one from Amazon since I had no interest in going to the Halloween spirit store and waiting in line. Next year, I will be more prepared. I was pretty busy this week. Still no excuse with our favorite company, Amazon. Please keep in mind that anything Matt or I or Roy say tonight or anybody else that ends up joining, there could be some more special guests. We'll see. Our opinions are our own. We are not financial advisors. We are not investment professionals. We're just a bunch of dorks that do way too much research and really enjoy talking about stocks and engaging with the audience. So thank you very much for being here with us. Hopefully everybody had a good Halloween. Hopefully everybody taxed their kids and taught them about free market economics and took some candy.
Matt, that's a great day, man. I was unfortunately I didn't get to finish it, but the compound seems like it's going to be a great episode. I only got about 20 minutes in.
I got to tell you, the compound's freaking great. It's one of my favorite shows outside of our crew of people. The Compound and Friends and All In are my two favorite shows on YouTube.
You're my favorite show on YouTube.
You're my favorite show.
I paid him to say that.
You're a good kid. Good kid, good role model.
Did you pick up any baked goods for this evening, Steve?
Baked goods. You know, in the spirit of Halloween, I'm going a little different. Going a little different tonight.
What do you get?
It will be revealed when the time is right, when you least expect it. You're going to approve. Don't you worry.
I always approve everything you do, Steve.
You're going to approve. And I have a feeling that you went and got some baked goods, sir.
I did.
I like it.
I get some baked goods.
I like it.
I was like, you know what? Steve needs me.
I do. I absolutely do. You're not going to show off the baked goods when the time is right.
You want me to now?
I mean, I'm kind of interested in what you picked up. I mean, you did a little head fake. You told me you were going to the shop. I thought you were going to the cigar store. You ended up going to the bakery. I'm kind of interested in what you got.
Well, I was hoping that Steve would let me install fans and stuff in my house so I could smoke cigars on stream, but he said no.
Hold on. I didn't tell you no. What I told you is the reality of how much it's going to cost to do it right so you don't leave a smell of cigars in your home.
Steve doesn't want me to be happy, guys.
Listen, if Matt Money wants to do it, I think he should. I just told him the reality of what you need from a ventilation system with the MER filters to get everything out.
You're a good man.
You're better. So, Matt, we didn't necessarily get a chance to talk. How are you feeling now that earnings are... I mean, we're on the downhill now. We're really just waiting for NVIDIA at this point. And a little Broadcom.
What's my feeling? Like thumbs up, Roman vote?
Yeah,
like,
where are we at? Are you happy with earnings season? Are you not? Where are you standing right now?
You know me, I'm always kind of in the middle. I am happy that the stocks are and the underlying companies are doing well, but I'd rather the stocks prices stay down. I mean, I'm not done buying. So I'm put in this, kind of rock and a hard place to an extent because it's like you always feel good when your stocks go up. It gives you that warm, fuzzy feeling. But at the same time, it means in the future you can't buy as much. So And there's somebody who buys literally every 2 weeks, if not more. It's it kind of sucks.
Can you elaborate? Because I caught the tail end of it on a midstream. What were you saying about index funds?
I don't think I was saying anything about index funds.
You were saying maybe it was just that statement about every 2 weeks. I thought you were talking about index funds for some reason.
Oh no, I was just telling people like I forget what somebody asked, but I was just elaborating that that's just how I invest. I don't try to take something from 1,000 to 1,000,000. I just continually add into my positions, as much as I can. So
yeah, I'm the same way. I mean, look, every 2 weeks I'm a buyer, obviously through retirement, but I'm also a buyer every month of individual equities outside of that. And I'm a long-term investor, and I'm with you. I wouldn't mind if positions experience the 5 or 10% downturn in the short term because I could get more what I'm still building out. But at the same time, I think a lot of people need to take a step back and realize that the S&P is up 16, 17% this year. And if we did get a retracement heading into the end of the year, it's not the end of the world. And we can still hit 7,000 with a retracement over the next couple of weeks.
I can feel that. Yeah, I can see that as well. I can see that as well, Stephen.
I'm very happy with where earnings are. I think the more important thing for me at this point is the trajectory of earnings, the trajectory of revenue, the AI story not being a bubble, the AI story being what the future is going to be built on, and the financials doing very well. I mean, there's a lot of good things. Very happy with SoFi. I feel bad for the bet. I wish you and Tevis did not make that bet because I don't think that we should be betting amongst each other. But that's besides the point. I'm reinvigorated.
I mean, it's different. It's different between me and Tevis because we vacation together.
I get it. I get it.
If I were to bet against you, much different because, well, I guess I could see you up in New York. But
yeah, it's not like we haven't met up and had some steaks.
Yeah.
But
what are we doing, Steven? What are we buying? Everything?
What are we buying? I mean,
I can't keep up with you in your BM&R. I can't afford it.
Look, I don't have a full position yet.
One day.
I'm a fan of BM&R. I'm trying to get back on the PayPal train. I can't do it. Hopefully Roy can talk me into it. I just think that, you know what? These damn guys, I'm going to try not to curse. These damn guys, like, it's the story of just being a PayPal shareholder, right? It pops and then nobody cares and it just sells off.
I mean, if it was that great of a company, would Elon have sold it?
Facts.
If it was, you know what I mean? Like, he didn't sell Tesla. Why didn't he sell Tesla? Right. I mean, so I'm not sure, maybe he was young, right? He was in his early 30s. If not, I don't know, maybe he was still in his 20s. I don't know. But I mean, if it was that great of a business and he really saw that much of a wavelength on it, I don't even know how much they sold it for. Actually, to be honest, I don't know how much they sold it for.
I don't know.
He got like 180, 190 million or something from it.
Look, those are some hard-hitting facts. I got to tell you. Hard-hitting facts right there, sir.
But I think, and it might have been, maybe it was, I don't know. This is all speculative and this is retrospect, but maybe he had split the equity amongst too many people. And you never know. Maybe there was just enough fighting. But anyway, to me, I'm still cautiously optimistic that there's just better platforms out there to invest in. But, I want everyone that's in PayPal to do well. I don't want anyone to do poorly.
I want everybody to do well. And I'm interested in your thoughts on Amazon because I know that that's your mission right now is to get to a full position in Amazon. You're not quite there yet, but you've been buying. And I know you listened to the call. I know you looked at earnings. Everybody's heard me talk about it, what my thoughts on it. I'll give you the raw thoughts after. We really haven't talked about it together. What did you think of the quarter?
I thought the quarter was good. I think for some reason, there's just a lot of haters coming out of the woodwork. Like, I just don't understand it a little bit. It's like, did they hate Jeff? Like, did Jeff sleep with their wife? Like, I don't know. Like, I'm not trying to be an asshole, but like, I just don't understand why there's so many people coming out of the woodwork hating on it. The company is in great shape. I mean, yeah, the underlying issue that I have with trying to understand where all this future capex is coming from, like, I get that, because they're going to be basically spending 125 billion this year. I think they're already at like over 100 billion in terms of trailing 12 months. I think it's like 105 or something. I forget what it is. So the fact that they're going to increase it enough in the fourth quarter to be 125 billion is insane. And then they said that they're not going to guide for it yet, but it will be more in 2026. I mean, that's just impressive. But if anybody has the wherewithal to be able to invest that much money, it's Amazon. I mean, their cash flow from operations in the trailing 12 months showed up at $130 billion. And other than Google and some of these other Mag 7 companies, I don't think anybody else is doing something like that. So to me, in the companies that are like the Googles of the world, they're dipping into their coffers, right? So to be able to pay for some of these things, they're going into the cash pile that they have on hand, because they already have so much obligated to dividends and share buybacks that they can't afford to pay for it from free cash. And you showed that in your chart. So I don't know. Like, I'm cautiously optimistic that they'll do well. I'm curious to see how long it takes for some of these things to actually show up to the bottom line. Like, is it going to be 2 years, 3 years down the road? And if it does show up, is it going to be 25, 30% margins when they do show up? Because if that's the case, then do that for 2 or 3 years, right? And we know what that looks like. Like 30% return on invested capital, and you're investing 100 billion. After 2 years, that should be another, 60 or so billion that should at least be visible to be added to the bottom line. So that's just insane to even think about. But I don't know. I don't know if it's going to get to that point. I'm curious to see how it shows up. The numbers are just getting so large at this point that it's almost hard to comprehend.
So I got a take on the numbers getting very large. It makes me think nobody's going to be able to compete with them.
Amazon?
No, just in general. The big four. I think that they're spending so much. Who can compete with Microsoft, Alphabet, Amazon, or Meta? In all seriousness, you think about what they're spending on data centers. You think about what their type of capital they're deploying, and you think about what they're going to deploy over the next 3 years. How far ahead are they going to be versus anybody who even wants to try to compete? And can anybody try to compete in the future? My answer is no. The best you're going to get is a CoreWeave or a Nebius, and I don't know much about them, being an augmenter for additional cloud compute. Other than that, you're not competing. You're not building what these companies are building. Did you happen to see the Amazon Project Rainer video from CNBC?
I didn't know, but I mean, I think that's important to kind of talk about, right? I mean, one of the things that you hit right on the head is, if you're starting from a small amount, like, you can potentially get to $100 billion market cap, and if you can find those companies that are going to be like the Nebiuses of the world, and I don't know much about it other than the fact that I know they're trying to build data centers out, but if you're to be able to compete against an Amazon, the amount of data centers and the amount of electricity that they need to build, 3.8 gigawatts is more. I'll just put it blankly. You've heard about all these oil and gas companies turning green, right? And so 3.8 gigawatts installed capacity is probably larger than a lot of the oil and gas company renewables portfolios. And that's Amazon alone in a single year. And we've been on this journey for some of these oil and gas companies since 2020, talking about renewables and investing in solar and wind and etc. So the fact that Amazon is just in this year alone at 3.8 gigawatts is astounding. And then the fact that it's going to be another gigawatt before the end of the year, also crazy. So
yeah, I mean, I don't think anybody's competing with them. I do think that these are best of breed. I think 2026 is shaping up for a year of the big just get bigger. I said that before, and I'm sticking by it. I don't see these companies slowing down. Maybe the street gets a little annoyed at spending at some point. It certainly isn't right now. And I'm going to sound like a broken record, but it's hard when Jassy, Zuckerberg, Sundar, and Nadella are all collectively spending aggressively. For any analyst, everybody can have their own opinion, that's fine. But for somebody who's not in the business, for their opinion to weigh more than the four of them, this isn't one company spending like a drunken sailor. This is everybody saying, this is where we're going. This is what we need to do to compete. And then you get Altman over at OpenAI making all these deals. You have Elon buying through XAI. It's just, this is where we're at. This is not the dot-com bubble. This is not building out fiber with companies that don't generate revenue. These companies are all utilizing cash from operations to fund this. I actually almost have the numbers updated. The new numbers are blowing my mind right now. I just got to do metas.
yeah, you picking up, have you decided whether or not you're going to pick up more? I forget what you said.
Of Meta?
Yeah.
I have a full position right now. That doesn't mean I wouldn't consider buying more. If I wasn't actively buying other things, I would be picking up Meta, but I am not at the moment. But I want to share my screen and get your opinion because it looks like you are still correct.
Always am, Steve. I'm generally early.
Oh, wait, hold on a
never
second,
wrong.
sir. Hold on. Alphabet is no longer. This is so disgusting. Oh my God, Matt. Wait till you see this. And for all you that don't know my slang, when I say it's disgusting, most likely that's a good thing. Unless I'm talking about Meta's sell-off, then that was absolutely disgusting in a bad way.
I think so too.
Like just.
I might initiate. Yeah, I might initiate actually. And now that I'm thinking about it, should I say this? Full disclosure, I was thinking about buying something for myself.
Ooh.
Nice gift.
Ooh.
What's
Matt buying? If you don't want to say text,
it's not important. It's not important, but
it's important to me.
It's important to you, I'll tell you. But
okay,
part of me is just like, actually, instead, should I initiate a position in Meta?
I know it's not. I've had those moments in my life too,
where I'm like, I'm only 34. Like, should I be really taking my foot off the gas? I don't know. So I'll text you.
I keep telling you, if I had your money, I'd donate mine.
You say that, Steven, but
all right. So, are you ready, Matty Capital?
I'm trying.
And we may need to. I don't think I have a different view. I mean, I could take us off.
You can put us in the corner.
Like that, right?
Yeah.
That's probably a better view for everybody and us, or at least you.
Nobody puts Matty in the corner.
Nobody puts Matty in the corner. All right, Matt. Alphabet is officially the king. Officially the king.
Flow or?
$151 billion of cash from operations in the trailing 12 months.
That's just insane.
That's disgusting.
How is it not trading? Dude, you look at that number. How is it not trading at 3 trillion? Like, why is it still below 3 trillion?
I'm going to do NVIDIA right now live, and then I'll get into my analysis. So check this out. And I actually don't remember what NVIDIA's numbers are right now. So hold on. Everybody's making a crazy deal because of NVIDIA's freaking growth. Alphabet still does more free cash flow than NVIDIA. How crazy is that?
Yeah.
Now, keep in mind, we don't have NVIDIA's new numbers. We don't know if they bought more stock or if they are generating significantly more free cash flow.
Good point.
So
everyone's ramping their capex like crazy. So I mean,
yeah, and NVIDIA doesn't have to. I must have hidden fields on this. I do. Let me unhide, and then I will. Where's unhide? Are you freaking kidding me?
I don't think you have one. I don't think you have anything hidden, Steven.
No, I do. How do you unhide? This is why I should never switch to Google Sheets because I don't know how to freaking use it.
No, it's easy. Just highlight B and then like hold B and then scroll like as if you're gonna scroll.
Yeah, there you go. There we go. Sorry, everybody.
Well, they pay me the big bucks, Steven.
That's why they pay Matty the big bucks and not me. Hold on. I'm almost done, everybody. Bear with my craziness. All right. Bear with the craziness for one momento. Where the hell's hide? There we go. I feel like there was one more thing. No.
Everything Steve wanted.
Yeah, we don't need market cap, I guess, or we can make that very small and just look at those numbers. All right.
You can divide market cap by
so
whatever.
Alphabet, 151 billion in cash from operations.
Are you pulling this from somewhere? You can divide it by a number and then make it so it's just so you don't have as many significant figures.
No, I like seeing the numbers. I'm a nerd, Matt. Come on.
Okay.
So free cash flow is 73 billion. They spend more than Microsoft on CapEx, way more buybacks. Return of capital, 65 billion, almost 66 billion. And Alphabet's cash from operations went up so much, they are no longer pulling from the balance sheet to fund their buybacks and dividends. The only one doing that now is Meta.
Interesting.
So Meta's dipping in almost 4.7 billion for their return of capital program at the moment. Good old Amazon. I mean, the fact that Alphabet is generating more in cash from operations than Amazon is pretty wild.
Cash from operations from Amazon.
130.
Nah. They've always been slightly ahead.
Amazon's always been it's been recently that they flipped.
Have they?
Hold on. Unless I'm losing my mind. Amazon cash from operations last year was 115. And Alphabet's last year was, I guess they were. I guess they flipped last year. Interesting. I don't know why. I guess I look at so many things, sometimes you forget things. But yeah, Alphabet's become the king. And what happens when all this CapEx starts to get monetized by them? That's the real question. Where does cash from operations go then?
These are the questions we need answers to, Stephen.
These are the questions that we need a crystal ball for. So do these numbers make you any more bullish on Amazon or not. I mean, the fact that Alphabet's now a $3.4 trillion company, it's been on a freaking run.
Which one?
Alphabet's been on a run.
Oh, Alphabet is 3.4 trillion now?
3.4 trillion right now.
Oh, okay. Maybe it's been a couple weeks since I actually looked at the market cap. Never
Oh
mind.
yeah, it's pretty wild. I mean, they're trading at 281.
Yeah, okay. Last time I checked, I think it was in the 240s, 230s. So that makes more sense now. Because originally I was like, why is it still below 3 trillion? It doesn't make any sense, but it's obviously above 3 trillion now. So
I do think Amazon is very interesting here at 2.6 trillion. And I think Meta is even more interesting at 1.6.
Yeah, dude, 107 billion in cash from ops, and you're trading at 1.6 trillion. They have to, because you look at it like Amazon's trading at, I guess now it's probably trading at 20x, right? And that's what I'm looking at, right? I'm looking at how much cash flow these things making, and where do I think that cash flow is going to grow, right? And that's why I've been so bullish on Google.
Matt, do you see my mouth that I just want like Home Alone? Wait till you see what I put up here. Just wait. Keep going. Keep going.
Put me on, Steven.
No, keep going. Keep going.
Yeah, I mean, I think 20x for these phenomenal companies that not only are higher growth than a lot of the things that are out there, but are also premium businesses. They warrant. And especially everyone says it's a fully valued market. It's like I find it hard to believe. Like,
it's not. It's not a fully valued market.
It's not fully valued. So, I mean, maybe Microsoft. Microsoft is trading at what market cap?
Well, I'll show you the next one as to why I don't believe it's a fully valued market.
Yeah, Broadcom's one I keep regretting not buying, but
it's overvalued.
Is it?
Yeah, it's way. Think about it. You're paying more for Broadcom than Meta. And look at the cash flows. You're paying 1.75 trillion for Broadcom, and they're doing 25 billion in cash from ops. Or you can get Meta for 100 billion less market cap, and it does 4x the cash from ops.
I mean, I know the PE is expanded above like 45, 50 for Broadcom. So in terms of a margin expansion, like I know that's been like a no-brainer to get a W on, but
yeah, Broadcom could be overvalued here. Great business, but does it deserve to have a bigger market cap than Meta? Hell no.
Yeah.
Hell no. I mean, think about it. Freaking, let's move NVIDIA. I mean, do these numbers make sense? You're paying double for Broadcom. Broadcom's 70 times price to free cash flow. Meta's 36 times. Does that make sense?
It doesn't, Steven.
Sometimes I think this market's out of its freaking mind.
It is. So are you.
It is so crazy that you have two companies that are so close in market cap, yet one does 4 times the cash from ops and is spending so much more on CapEx because of what they're doing, and they're generating double the free cash flow, yet they have half the valuation. Numbers are numbers. It doesn't make any sense. And we have a special guest. Very special guest. You know what? He can light a match underwater. Did you know that, Matt?
I think you can do more than that.
He can do a lot more than that. But I mean, you got to be talented to be able to create fire underwater.
I heard.
I was waiting for him to start laughing before I brought him on. Hello, Roy.
Hey, guys.
I heard that a baby somehow fell out of its stroller onto the train tracks, and he stopped the train with his bare hands.
I heard a similar story.
I heard that one too just now.
So please, everybody, thank you for being here. Please go follow Matt. Please go follow Roy. They make great content. Please give them a follow and watch their content. They do some really great stuff.
Thank you, Steve.
All right. How are you doing, brother?
Good. How are you?
Good.
We got to have that lunch sometime.
I know. Yeah, I meant to schedule it for today earlier this week, and then I just got completely sidetracked. But I leave for UK tomorrow, so
Okay.
I'll have to
Well,
wait
you have
until
a
either
good trip.
next week or the week after that.
Yeah,
What am I
we'll
going to
figure it out.
do when I can't call Maddie?
You can call me through WhatsApp.
I guess I could call you through WhatsApp. So, Roy, I have some questions.
Sure.
So 3 companies I want to get your opinion on. More, but really 3 are like at the front of my mind. Can you guess what 3 they are?
For sure, PayPal, probably BM&R,
No.
maybe Palantir,
No.
SoFi,
Yes.
Robinhood,
No.
Air,
Alphabet. So
CRM.
Palantir, I'm sorry. Now you're screwing me up. PayPal, SoFi, and Alphabet.
Okay.
So let's start with PayPal. Give us the 1 or 2 minute, what did you think of earnings? Are you disappointed with what happened because it's a typical life of a PayPal shareholder, et cetera, et cetera?
Yeah. So, in a nutshell, very good solid earnings, exactly as I expected. I mean, there's a few things I'm slightly off on. And I also expected very little as far as stock price action. I didn't think we'd go down much. Didn't think we'd go up that much either. Now, the thing that shifted it, I think, was the OpenAI partnership, which is something that I thought was going to be an inevitable announcement when other people saw OpenAI partnering with others. Like, they partner with everybody. They're going to partner with PayPal as well. PayPal is very well positioned here too. As far as the actual earnings, Q4 is going to be the earnings to really watch. I've thought that for a while now. There's a lot of things that coincide at the same time. The Braintree headwinds being removed, of course, helps. Holiday spending helps, although it's a year-over-year comp. They're doing things with Buy Now, Pay Later and Venmo as well that will be really driving a lot of revenue in that Q4. There are some macroeconomic headwinds that they talked about during earnings call, which is when you, like, if you're watching the stock price, it took a dip right then when Jamie Miller started talking. She's a great CFO, but she's really good at stopping anything positive in the stock price. So talking macro, like nobody wants to. I mean, you do want to hear that, but anyway, but it's not just a PayPal thing. So essentially, PayPal was an ocean liner, old legacy company that honestly had not done much in the way of innovating, had underachieved for a long time. Alex Riss came in, is like, we need to change the direction, but ocean liners don't turn on a dime. Where they're at right now is they've made the turn and they're accelerating the other direction, but that acceleration takes time. So really what they need to get the market very interested is higher top line revenue growth. It's not the most important measure, but it is important. And where they're at right now is improving, but they really need to hit that double digits. They don't need 57% or whatever I'm predicting Palantir to do. But 10% would be good. And Branded also needs to reaccelerate. Branded has not. Alex Riss talked about it on their earnings call. It's not good enough either. They have some measures that will accelerate it some. And also part of it was their own fault with the Germany bank stuff. So pretty much exactly what I expected. I think Q4 is really that pivotal moment. They do need to change how they talk about some of their new innovative products and also really give very clear guidance as far as where Fastlane's at, which they didn't talk about at all, where advertising is at, where they didn't talk about very much. They need to give that a breakdown. And even if they're not guiding for it, just some early reads. They did not do that. That was really the only thing that I found very disappointing and upsetting.
So you're not worried about anything? You're still bullish on PayPal?
Oh, yeah, absolutely.
Okay. Matt, do you follow PayPal?
I do not.
Okay. Let's move to SoFi. Roy, your thoughts on SoFi?
It's amazing. I mean, just a ridiculously good quarter, almost as good as last quarter. I actually think it's a better quarter than last quarter. There were several things that stood out to me, but I mean, the big one, which I think is where where the market's at right now is it really appreciates companies that have that top line revenue. Again, that's one of the issues with PayPal. Not an issue with SoFi. Man, they are growing on all cylinders. This quarter, I think, was really helpful for the market because you can always look at the last quarter and say, well, it's a one-off, it's a fluke, it's against a very weak comp, and it was, but it was still a great quarter. This quarter, you can't do that. You can't say that. And there's very little in the way of any bearishness there. Loan platform business is accelerating ridiculously. There is no risk as far as defaults. There is no capital constraint there. And it's very early in that product. They've only have really personal loans. Chris Lapointe talked about, and Anthony Noto as well, international expansion basically through the loan platform business, which is interesting. It's more nuanced than that, but that was a very, very interesting. And yeah, I didn't see much in the way of concerns or weaknesses. They're just doing amazing things as a business. They're continuing to grow. Yeah, just fantastic.
Yeah, I thought this was their best quarter yet. Made me reinvigorated. We're going to talk tomorrow about it. Please go follow Roy on YouTube. Here's his link. Does some really great analysis. We're going to get Matt's up there right now.
You still have SoFi, Matt?
No, I sold it for Amazon.
I see how
it was just a too small of a position.
Yeah. No, I
like to keep it very consolidated. I like to keep less than, I think I probably have 7 big positions.
So please go follow Matt. His link is here for YouTube.
Doesn't mean I'm bearish, by the way. I mean, I just
there's like we're going to talk about Google. I'm not bearish on Google or Amazon. I'm not bearish on Amazon. It's just concentrated portfolio. So you pick your 6, 7, 8, 9, 10 very favorite companies to invest in, and that's it. So, you don't have to do it that way, but yeah.
Let's move to Alphabet. This is one that you and I have disagreed on. It's one of the few that we disagree on. So you're not bearish Alphabet anymore?
Let me
rephrase because you may not have been bearish. Let me rephrase it. Do you still think that search is going to get cannibalized?
Yes.
Okay.
Yeah. Where I shifted, it was really early into this last quarter. With a lot of what I was reading, I'm like, okay, there's 2 things going on. One is that thesis is still right. The model of the web that it's built around, which is favored to Google, is shifting and changing. What I underestimated was how durable that mode. Well, 2 things. How durable that mode is really for Google. Like one of the things that they did was they changed their indexing. So used to have a 0, 100 variable that you could put in. Basically, search engine guys and LLMs and everything could see then the top 100 hits, which was hugely significant because a lot of other LLMs were, I think, for free through API access, basically using that indexing variable, which helped really inform their own findings for the LLM stuff. They changed that. Google's like, no, you're not doing that anymore. Which at that point, this was like mid-September, I could personally see, and many others corroborated as well, OpenAI started being like pretty terrible at that point. Gemini was actually doing really well, and Grok is its normal, really dumb self. So, and then the other variable was beyond just that Google is able to do things like that because they are a monopoly, and the government's not going to do anything about that now, is that search engine guys and advertisers have been using Google so long that for some of the guys, that's all they've been using. Now, every single one of them universally agrees with what I said, that search is being cannibalized and it will be disrupted, and that the model the web has been built on is going to be no more at some point in the future. The hard thing is if somebody has built their entire career, like they've spent 15 years in the business doing SEO for Google, most of them are not going to be very agile, and they're not going to make that pivot or that switch nearly fast enough. They're going to do everything because they think that they're on top of things and they can just tweak this and figure out this, and they're still there. And honestly, that's the bigger thing that I shouldn't have missed, because I understand that about human nature. But I did. So it's going to be a slower process than I thought, which means that because the other half of the business for Google, I'm very bullish on. If that was a separate entity than search, I would have bought it a long time ago. So basically, this is giving them a significantly longer runway, which may be the wrong word because I mean they make a ton of money. That's not a concern. As that's disrupted for AI products to ramp, so they may not really even you'll see it, you'll notice it, but I don't know that the market will ever care because your growth from all these other vectors is faster than the decrease in search.
So here's where I'm at. When I see search continue to increase quarter over quarter and year over year, and on a year over year basis, jump 14.5% to 56.57 billion and add 7.2 billion in revenue, it doesn't look like anything's getting disrupted from them. Whether there's less search and they're just charging more, to me, the revenue is the revenue. Now, the big thing for me with Alphabet, and I've been on this bandwagon for a while with Cloud, but we're going to start with Gemini. So I actually thought Gemini was the worst out of all of them for a while.
It was.
And I really liked Grok for several reasons. I thought Grok was really good. And to be fair, I don't use ChatGPT. So I need to make a disclaimer that this does not count for ChatGPT. I pay for premium Twitter or premium X, and I pay for extra storage with Google. So I get the extra Grok stuff. I'm sorry, extra Gemini stuff. I'm not going to pay for ChatGPT. But I feel like in the past couple of months, Gemini has gotten really good. And when I saw the numbers from Gemini's models are processing 7 billion tokens per minute via direct API. The app has over 650 million monthly active users. It's processing 1.3 trillion quarterly and monthly tokens, which is crazy. AI mode has over 75 million daily active users. And AI overviews has now scaled to over 2 billion users. I'm actually shocked at the numbers out of Gemini. And then when I look at Cloud, I mean, it's just crazy that Cloud revenue increased 34%. And the big number for me, backlog grew 46% quarter over quarter and 82% year over year to 155 billion. It's like, what doesn't this company do right? It's just nuts.
Yeah, I mean, there's a few things, but I mean, it's a great company and it's in much better shape than it was a couple of years ago. Yeah, if you could throw this up, this is the Arena leaderboard, LMSys. It's a good thing to check. Basically, you pick any of these and you just enter whatever variable. It's going to pick two in whatever category of the LLMs, and then you just let it know which you prefer. And so a lot of people still do this and use this, and it can actually be pretty useful. But you can see just how dominant Gemini has been. We have Gemini Pro at the top of text, which arguably is the most important. Web dev is pretty important too, but it's not as high. I actually thought Claude would be number one there, but GPT is. Vision, Gemini is number one. Text to image, Gemini is right there. I don't know what this one is, but yeah, Gemini is doing great there. Search, Gemini is second. Grok is actually number one, but if you look at the score, it's actually very close. Image edit, Gemini is number one. Text to video, well, you have Veo. Guess who that is? Veo again, and then Copilot, which they're down a little bit. But yeah, that's not too surprising. Claude's done a lot of work there. So pretty much, if you take a composite, I know what they do. I just didn't find it there. Gemini is number one.
Yeah, it's pretty wild how it's expanded, and it's a great business. It's a great business. Those are, I can't say enough good things about Alphabet. I think it was crazy trading at 140. I think it's very close to fair value now, and 291 was my fair value, so it's really close to where I had it at. I need to reassess after this quarter. I haven't done a new fair value on them, but what did you think of earnings season so far with basically the big five reporting?
Yeah, no, it's actually really, really healthy. You see companies like Fiserv, which if you want to talk, we can talk about that.
We can talk. I mean, I can talk drugs with you.
Where they if a company does really badly, it gets just hammered and destroyed. If a company is priced to perfection, it normally gives up a little bit. Meta was kind of a weird one. I guess Algo's got a hold of that. It looked really good to
100%.
me. But overall, yeah, very strong earnings seasons, which are being rewarded. And then there's some companies that are weaker. And you don't, what I wouldn't want to see is, of course, a bunch of misses across the board, especially for big tech. And the other thing I really wouldn't want to see is, things like Fiserv missing terribly and like, it's fine, the stock goes up. That can last for a little while, that euphoria, but that's a really unhealthy 2021 vibes environment. So this is so healthy and great. And yeah, big cap. I mean, like this week, it's like 41% by market cap of the S&P 500 reported earnings. And I mean, it was I think even better than typical, if I was hearing correctly, in terms of earnings and results beats. It's very good.
Yeah,
What do you think?
I'm in the same camp. I think it's a disgrace what happened to Meta. And here's my gripe. And I want to see what you two think. Set me straight if you disagree, both of you. But it drives me insane when this type of shit happens because it happened last quarter with Amazon. It actually happened to Amazon, I think Q2 last year also, where the algos get a hold of it because people hit the sell button the second earnings get released on the Bloomberg terminal and they see the top and bottom line. That's all they see. They don't read the report. The earnings call hasn't happened. You don't have time to go through the financials. You don't have time to read the first paragraph of the press release, and it's already gapping down. It's insane. And then you got short-term money stop losses getting triggered, and these companies just get caught. And for Meta, this was nothing more than a one-time tax charge. This was nothing more than them missing EPS by $5.66 and only generating $1 something of EPS instead of $6 something. Yet, if you go to the cash flow statement, they actually grew their free cash flow because their cash from operations increased by 4.5 or whatever it was billion, but their CapEx spend only increased by about 3.4. So they actually grew the free cash flow by $1 billion. And it was just crazy. The algos got a hold of it. And on the earnings call, their CFO, Susan Lee, specifically said this was a one-time expense that will hit earnings and net income, and it would be accretive and beneficial, this new tax code, in Q4 and in quarters going forward. So it's like, it just drives me nuts when this shit happens. Matt, do you think I'm over-exaggerating? Do you think I'm being crazy about this? Or do you think there's a little bit of merit to it?
Let me spin it in a little bit different perspective and then maybe get Matt's perspective as well. So I'm not a shareholder of Meta. I don't love the company at all. I'm actually pretty tempted, which I'm not going to do, but like just getting in for a trade.
Oh my God. If Roy's saying he's tempted, it's a good value.
Dude, that was a great quarter by Meta.
You hate it.
It was really good. So the algos will absolutely do this. We saw it, like case in point, we talked PayPal recently. PayPal adjusted the way that they did their EPS to be more transparent, made it very clear beforehand what they were doing, caused them to have an EPS miss. This is last January, not this January. This is back in 2023 or 2024 rather, which was not a miss. But the algos were set up the wrong way, and it just sold off a really good earnings. Doesn't matter. It's PayPal, whatever. But the counterpoint that I'm going to pitch to you, Steve, is this is like, when somebody has, your favorite milk there in the store, and it's usually like $8 a gallon because it's premium stuff, and the store manager or whoever messes up and it's priced at $3 a gallon. Or do you get mad because you're like, I've been buying it at freaking $8 and buys it? No, you're like, it's the same milk. It's great. It's not expiring. I'm going to load up and get as much as I can drink. And that really should be our attitude. Every earnings, there's usually at least a company like this. It gets sold out for no good reason at all. It's not because there's, you got to do it with the milkman. So this is our alpha. This is our opportunity. When the algos are stupid because they just react based on the numbers, they don't know what's going on, we can look and say, this is really dumb. And if we wanted a piece of Meta, like this is just that market pricing milk down way too low. What do you think, Matt?
Yeah, I definitely think it was a decent quarter. I think the thing that's confusing me the most is it seemed like that this one-time tax charge caught analysts by surprise. And generally speaking, like, when you're in the executive suite, like all you're doing is chatting with analysts a good bit. Like you go on a lot of these road shows, like look at Jensen, right? He's always traveling around talking to people. So I'm kind of surprised that, people were caught off guard by this and the algorithms kind of weren't prepared and that the EPS didn't have this taken into account at all. It's very surprising to me because generally speaking, it's not a large surprise when something like this happens. But regardless, I think that the thing that I'm most surprised about is the stickiness and the resilience of some of these products that have really just been, I don't want to say cast aside, but I never really thought Threads would be generating a lot of revenue. I personally was one of the first few million to be using it. And I honestly just didn't think it was going to catch on. And, it seemed to die down, but now it seems like it's coming back like gangbusters. So in that respect, kudos to them. And I still think there's a lot of long-term benefit associated with, what am I going to say? With long-term benefit associated with WhatsApp not being completely monetized as well. So there's just a lot of things out there that I think still need to get added to the bottom line for these guys. And I think they were unjustly attacked. And Steve just had the cash flow from operations up. It's trading at a 16x. And it's growing pretty fast. So to me, not only are to me, Amazon, Google trading at decent valuations. I mean, they're not dirt cheap like they were, right? Obviously, the market has now responded and they've obviously grown in price by, $500 billion a piece over the past couple sessions. But Meta now being at a $1.6 trillion market cap and generating, what was it, Steve? Like 160 in cash flow? I forget what it was. It was something absurd.
Meta?
Yeah. No, it was 100. It was 100.
107.5.
Yeah. So, I mean, that's just...
Yeah, I'm just finishing I'm updating all the EPS because now the EPS new targets are out. So just give me one moment. And Meta looks, I got to tell you guys, it's not just Meta. I think that this is a market that everybody hates because everybody missed it, because everybody was on the sideline and they were scared or whatever reason. Tom Lee's right. This is the most hated freaking rally. And I got news for everybody. This does not look like a market that's that expensive. I actually want to put a couple of old school companies in here. So I'll bring this up in a moment.
Well, let's for sure talk this. Would love to talk a little bit of Palantir since they have earnings, and we got Matt here, and you're wearing the Palantir cap. So
heard it here first.
Yeah, I just did my predictions this afternoon, and
what do you have for revenue year over year?
57%.
No, you don't. Really?
Yeah.
I'm gonna have to go watch your
They
video.
guided for 50, Steve. Like
they guided
they
for
guided
49.8. Let's be technical.
Yeah.
But
No,
yeah,
I
think 53 is what they're going to do.
I went through several things, but yeah, I could be off a little bit, but it's north of 50, which is just astonishing. And,
yeah, I agree with you.
Yeah.
I mean, it's tough. I think the company's overvalued. I mean, there's no doubt about it. But I think if you look long term, and I think this is what's always kind of matters to people, in whether or not you take an opportunity to get in the stock. I'm still buying. I bought some yesterday. Not buying in large masses, just a small trickle of cash coming from. And the way I look at it is, it's like I have shares that I bought at $6-7, and so if I'm able to buy a share at 200, then technically I'm buying it like at the low hundreds, right? I mean, if you average it out. So, I'll offset some of that great cost basis that I have, but the thing that's most important to me is owning more of the company. And yeah, I know for a fact that people are going to take this and clip this like Matt was buying at 200. He's an idiot. Maybe they'll have a rollover, and that's fine. I'll still be buying. Like, it's not like I'm hurting for cash. I think the problem is when, and this has happened to me all the time, every time we have an opportunity where the market goes down, say 20, 30%, I can't buy enough. And so, unfortunately, I have the cash flow now. I get a paycheck now. And so I'm always buying when I have the opportunity. It's about, to me, owning more and a larger percentage of these great companies because they're going to be $1.5 trillion. In the case of Amazon, 10 trillion. In the case of Google, 8-9 trillion, maybe even more. So to me, it just doesn't make sense to not keep adding them. It's like adding certainty to your portfolio. But in terms of, sorry, go ahead.
I made a decision last quarter because that quarter was literally the best earnings of any company I've ever covered and seen. Like, I know Nvidia had better ones. I wasn't covering it then or anything. It was so ridiculous. I'm like, okay, I have to hunt for weak spots, and it's just international revenue and then having too much cash and not enough to do with it. That's a pretty good problem. So, but I was like, I'm just going to start buying more. It's going to be an extremely slow DCA, like so slow. It'd take years and years and years and years to double my position. But I'm like, okay, I don't care that it's at 165 or whatever. Just do the slow DCA. Because I want more. I sold more than I intended to because those covered calls got away. And like when the market dips, Palantir will not cooperate and will not dip like it's supposed to. I wish the bears were right. They're like, oh, Palantir is going back to 25. Good. Get it to $25. Let me load up.
Anybody, who are you talking about? Everything Money?
No. There's the long investor has said something similar. He's weird. He holds Palantir, but he doesn't like what they do, and he's bearish. So go figure. But there's a number of other people out there too that are like, Palantir's going way down and it's way over. It's very expensive, very expensive. I'm not expecting the stock to pop in earnings, but I'm also going to be careful with my covered calls because I do not want those to get away from me. But
very expensive, but
it's one of the best companies on the planet.
Phenomenal company.
Yeah.
So real quick, I want to get back to this. We can go back to Palantir in a few minutes, but this does not look like an expensive market, and I truly think this is the most hated rally because big tech has expanded so much, and at the market caps they're at, they still look cheap. So Coca-Cola is trading at 19.97 times 2027 earnings. Walmart, 30 times or 31 times 2027 earnings. Costco, 37.4 times 2027 earnings. So the companies are supposed to be recession proof, and I got a whole bit on recession proof, like that's bullshit. But the companies that are looked at as recession proof and safe stocks are trading at larger multiples than, except for Coca-Cola, Walmart, and Costco, spectacular 6 because Mag 7 minus Tesla. But Meta's trading at a lower valuation than Coca-Cola on forward earnings. We're almost double the growth. I mean, they have 28.09% earnings growth over the next 2 years. Then you got Alphabet trading at 22 times, Microsoft 23 times, Nvidia 25 times, Amazon 25.5 times 2027 earnings. I mean, how do you turn down Nvidia at these levels, but it's trading at 25 times 2027 earnings with 80% forward growth over 2 years?
Yeah, people have asked me on that too. If I'm not afraid to buy Palantir, I'm not afraid to buy Nvidia here. But the valuation is not egregious. And actually, my middle son today, I almost disowned him because he told me, well, Nvidia is going to, fall down because it's, no company deserves to be $5 trillion. It's very expensive. I said, okay, by what measure? And we talked through it. And he was wrong. But I mean, he learned a few things on that, which we all do. But I mean, it looks expensive if all you know is $5 trillion and look how much it's gone up. When you look at the actual numbers and what they've done as far as growth, they are just thriving.
It's incredible.
I don't see anything that changes that short term unless China invades Taiwan.
Then all bets are off.
Yeah,
and it's not just them, but even Microsoft here, even Microsoft at 517. I mean, they're going to do almost 40% growth over the next 2 years, and they're trading at 23.5 times forward.
Well, but I'm hearing that this is like the biggest bubble of all time, Steve.
I'm hearing that too, and the people that are saying they're stupid. Like, you can clip that. Like, I'm telling you that my opinion is they don't know what the hell they're talking about. And I don't
Yeah,
care
and,
what.
and there
firm
are
they
some
go.
names out there for sure that are bubbly and that are expensive, but
There are names that are super expensive. There are names that make no sense.
yeah,
Most of those names, if they go to zero, will not impact the market because they're not part of the indexes.
yeah,
Yes, Robinhood looks expensive. Yes, Palantir looks expensive. That doesn't mean that they have to go down. But a company like Oklo, a company like SMR, they could go to zero. Nobody's going to care except for the people that are chasing it because they're not part of the S&P. They're not part of the NASDAQ 100. It's not going to matter for the Qs. It's not going to matter for SPY. It's not going to matter for index funds. All those companies are getting stupid valuations. Doesn't matter. Like this is the most hated rally because you have people who are supposed to be the smart money looking at these companies and looking at everybody on X showing 6-figure, 7-figure gains on stuff, and they're maybe not even beating the S&P this year or just slightly beating. They're like, what the hell's going on? I think that's why this is the most hated rally. I don't know. That's my rant on the most hated rally. You guys think I'm a little off on that, or?
yeah. I'm curious on your thoughts there, Matt.
I do think that there's some people out there that are generally a little bit too bearish when it comes to.
Well, tell Chris he's wrong, so that'll solve it.
Is Chris bearish NVIDIA?
No,
I was gonna say I didn't get the memo.
Chris is more cautious, which has served him well, honestly, and he'll probably outperform me, in any like 5-year stretch that you pick, just because of that. But yeah, I think Matt's a little more cautious too. But honestly, when you become a billionaire like Matt, you want to protect your money a little bit. So
yeah, I'm a little bit cautious. I mean, I think the easy money's been made, but I've been humbled before, so I don't know. I'm kind of curious to see what happens, but I don't know. I think that there's some foot to drop. I don't know what it is. It seems eerily quiet. Everything seems to be going too well. And generally speaking, when something like that happens, maybe it's just me being a conspiracy tinfoil hat wearing conspiracy theorist, but I don't know. I feel like something's around the corner that we're not entirely quantifying. But it's not to say that I'm pulling my money from the market. I'm always going to be invested, and that's a piece to kind of think. Like, I still am bullish on a lot of these companies, and I don't think it's going to be something that happens tomorrow. I still think that, I think, as you guys heard me say, like, I think a lot of these companies are still trading at decent fair valuations, and Meta being one of them as well, Amazon and Alphabet. So in that respect, I mean, I still think that there's room to grow from here. And I'm not saying the next 6 months or anything, but I think in the next 18 to 24 months, something's going to happen. And
I think I know why you feel that way, Matt.
Why is that?
Because it's already on the stage. I just got to add it. Because we had 2018 where the market S&P was down 6%. Then you had 29%, 16%, and 27% from 2019 through 2021. I mean, let's not forget, the pandemic happened and we still grew 16%. And then you have 2022, market's down 20%, everybody freaking out. And then 24%, 23%, and oh my God, tariff war, trade war in April, and we're still up 16.3%. So I get it. It feels like something's got to happen because it's been too good for too long. I'm just not seeing that it's that expensive right now. That's the crazy part.
Yeah, I don't think that we have a bear market until probably 2029. But I mean, there are some things that definitely could break in the macro. The one that is nearest term that is most likely to make an impact is going to be consumer health and consumer spending. Right now, the shutdown is impacting a lot of people, or beginning to anyway. November 1st, there were no more SNAP benefits at all. That's 40-something million Americans.
Wait, didn't that just get struck down, though?
Did it? Did I miss it today?
I could have swore that I heard it got struck down.
Well, I hope so. Yeah, I know people personally that are on SNAP benefits.
Hold on. Am I wrong?
Yeah, some people are saying it did. So good.
Yeah. I could have swore I heard today they got shut down.
That's good. They say a judge struck it down, so that's
Yeah.
excellent. There's still a shutdown, which means, that I think it'll probably resolve sometime in November. So that goes most of the benefits for most of the time for recipients. I'd have to read and see what happened regarding the judges, but I'm seeing some mixed statements there. Anyway, even without that, there's a lot of stress on consumers. Some of it is related to student loan repayment, which will not be forgiven. There's a lot of people that took out really high interest rates, and rates are not falling really that high. We, of course, saw some stress with the lower income auto loan stress, which was a theme just from a couple of weeks ago, which kind of spooked the market a little bit. But I can tell you, at least in Houston, and Matt, maybe you can corroborate, but for a lot of people that are on the fringe and are lower, very low class, limited income, they are really stressed right now. And Houston is probably one of those easier places to live and survive, and things tend to be a little bit cheaper too. So it wouldn't shock me that we get, really good Christmas season, holiday spend, and then people pay for it on the other side and they can't. That can cause ripple effects as well. But I'm seeing a lot of it personally, and I'm pretty concerned with that. I don't think that it'll be enough to put us in a bear market, but it can give us a pretty healthy correction and pullback. And I don't know.
I'm worried about unemployment. That's my big worry. Everything you said is valid, and I agree with you. I don't know if it's going to be enough to get us into a bear market, only because I'm a little shocked that the economy is humming the way that it is right now. And I don't know if that's going to push into the negative. Unemployment being up 0.9% is very scary. The acceleration of AI and robotics is very scary. And I think that we're going to be in a situation where over the next 5 to 10 years, I don't know how to quantify a number, but I can see a path where there's no more Uber drivers, where the trucking industry is destroyed, where robotics, humanoid, is replacing people getting their first job stocking shelves in a supermarket, that type of stuff. And I think that we need to figure something out, and that's going to be the ultimate thing that throws everything in disarray. Because how can we say that we're not going to advance to those levels when all this capital is being thrown into AI and robotics? I mean, Amazon already has more than 1 million robots in its fulfillment centers.
Yeah, I think we'll see. Honestly, what we've seen, aside from UPS, are pretty normal. I know a lot of people just, post big numbers because they look scary and they get a lot of clicks. News is bad about doing that. They'll do that as well. Amazon has done similar size layoffs in 3 out of the last 4 years. So, you can't, like 2023, the beginning of 2023, that's when there was some unusually sized layoffs, especially in large cap tech, that seemed a little bit spooky. This doesn't, except for UPS. They're hurting as a business. So I think that the forces that you mentioned are going to for sure play out and impact employment, but that's going to be a slower process for most businesses, Steve.
I hope so.
Yeah, and that's why 2029 I have is, probably the almost for sure end of the bull market, because at that point, that's when a lot of the forces you mentioned really begin to play out. You have AI pushing far enough to remove a lot of the redundancies, and I hate if somebody is a redundancy, but a lot of administration and stuff really is. It's just there are good administrators. There's a need for humans, but you also start to have a lot more automation and mechanization through robotics by that time. And so I think those twin forces really push us from unemployment just ticking up a little bit, even as labor force participation drops a little bit. And then we get to that crisis point, which hopefully it doesn't become a crisis. We figured out before. I don't know if UBI is necessary at that point or what, but at least looking at the disruptive, the impact as far as disruption. And of course, there's acceleration the further we get as a technological society, from like the timing of the internet and the timing of like certain other ventures as well, like the smartphone and mobile advertising, mobile gaming, all that stuff, mobile commerce. it's a 4 or 5 year thing on AI.
Thank you so much for the super chat. Can confirm CR is true for my small biz. At least 50% of my new patients come from ChatGPT, not website, not Yelp, not reviews. It's interesting.
Yeah.
It goes to what Roy was saying. Very interesting.
I mean, like I think that anybody that's in the know knows that it's happening. It's just a question of like when and how much, because it's not going to be search goes to 0 like in a year or anything like that, and even in 20 years it'll still be around. But yeah,
I have something I want your opinions on. So I was thinking about what would make brokerages better. Why do they not track tax you owe throughout the year? How hard is that for them to do? Why do they have to issue a freaking 1099 in February?
I hear other countries do this. They tell you you owe this much.
They keep track of everything I'm doing and just give me a running fucking total.
Yeah, you owe this much. If you disagree, then you can do your own taxes and put why. Good.
I just want a running tally. I mean, how hard is it for them just to keep a running tally and say subject to change, and the final number will be when we issue your 1099? I want to know what I got planned for.
It's not an issue with the capability or technology. It's an issue with lobbying, and I'm sure that there's major tax firms that lobby and have certain special interest stuff done where they're like, don't disrupt this industry.
But how would that disrupt anything? Why would they lobby?
Well, all the tax accountants.
There will still be a need for some of them. I'm still having my account to my taxes. It's just when I get the 1099, I'm going to know what my plus and minus is for the year, especially with all the other stuff that happens, dividends, everything else. Why is it that I can't know that number at the end of the year so I can start preparing for it in January instead of guesstimating what I need to prepare?
Yeah, and I think the other is too, I don't know that the government actually wants taxes to be a very straightforward process. You know, there are entities that do, but I think that they prefer that to be less transparent. If people actually realized how much they pay in taxes per year,
don't get me fucking started about it. It's insane.
And you look at what we're actually getting as a society and what we're doing, you would be furious, especially given that we're going into debt for it.
It's insane. I mean, when you actually look at your paycheck and see what comes out after everything, I gotta tell you, it's infuriating.
Especially if you live in an area that has state taxes. Of course, in Texas, the issue is a property tax, which is a real tax, but it's not transparent. I mean, you see it, but honestly, if you have a mortgage, you're like, oh, I'll just have that done automatically, and I don't have to worry about it. And you don't realize, man, the tax bill is incredibly large when you pair all the different taxes that you pay. And the crazy thing is, like, look at the taxation that our colonies revolted against. I would love that level of oppressive taxation that Britain put on the colonies compared to where we're at now. Or I mean, like there's been other tax revolts and tax issues and tax warnings too. Like one was a 10% tax. People were not. They were like, it's egregious, and is one of those. It's happened a long time ago where people were like, we can't give the government as much as we give God. I would love to pay 10% tax. It sounds great. And we pay a lot more.
Maddie, what do you think?
Yeah. I don't know. I wasn't paying attention.
You love taxes.
Are you doing what I think you're doing?
Yep.
Okay. Well, by the way, the time is right. And in spirit of Halloween, I am having some Hershey's miniatures. Because you can't go wrong.
They're good.
Matt looks disappointed in me.
I'm always disappointed.
Matt and Steve, I gave out potatoes tonight for Halloween.
Did you?
Yeah, I gave the. This is the third year I've done this. It was a meme from like a long time ago back on the internet. I'm like, I love that because I love potatoes, and so I'll give kids a choice between 1 potato and 3 pieces of candy. Actually, good candy, and it's about 35 or 40% choose a potato.
People take a potato over candy?
Yeah, a lot of people. 8 and up. If it's a mel that's 8 and up, I can almost guarantee they will pick a potato. And it's not because they're throwing it through windows or anything. I even had like outside.
Dude, I've never heard
kids.
of this. What's the meme? Like, what happened?
It's just somebody that gave potatoes one year, and people were all excited about it. And yeah, it probably like 8 or 10 years ago. I'm like, that's a great idea. And like, so it really happens. Like last year, I was sick during Halloween, and people remembered me. Like, how many houses do you actually remember when you trick or treat? But they're like, "Where's the potato man? Where's the potato?" And so this is our second year doing it. This in the area. We were in Virginia before, and no, like literally, I had a bunch of kids come, and they were like, "This is the best house," and then they ran and told other people to go get potatoes. There was even some kids that, because of, I guess, peer pressure, I don't know, that had taken 3 pieces of candy, and then they came back and like, "Can I give the pieces of candy back and get the potato?" And I let them. But yeah, ran out of potatoes faster than candy, so it's fun.
Okay. I did not have that on my bingo card, sir.
Yeah, every year.
Did not have that on my bingo card. So are we positioning ourselves for anything for the remainder of the year, or are we just going to let the winners ride? What are we doing?
I think that towards the end of the year, I might tax loss harvest a little bit of a couple of my positions that I'm down on. They're all leaps. These are PayPal leaps specifically. And so I may go ahead and do that, not on the shares, and then re-up them, that not basically the same amount, not a 1-for-1. I just have a lot of gains to offset, which is a good problem to have. So, and I expect that, anything can happen between now and then. There's 2 months. It's a lot of time. Macro is where it's at. And yesterday was like really weak. It felt, there's a lot of fear out there. I'm like, this is weird. Why are people acting this way? And so we could get a big pullback before then, but it wouldn't shock me, just like this year, that we see a pretty healthy pullback in January after the first couple of days after the Santa Claus rally. So we'll kind of have to see, but that's what I'm expecting, not trying to time anything. But between now and then, I'll have some money coming into the market, and I think a lot of that I'll just let sit there, more so than sell out of anything.
Are you on the BMNR train with everybody?
Yes.
Okay. How you feeling these days? Because I had talked people off a ledge last night.
I mean, I don't really know why people were expecting like an immediate, like Ethereum's been, okay, 2 things. Ethereum has been really weak, so it shouldn't surprise you that DATs around Ethereum are going to behave in a very weak way. It's a leverage bet of Ethereum. That's what it is. It is easier to get to that 5% of Ethereum at a lower price. So they're doing that. They're staking, or not staking. They need to be staking soon. They're stacking, which is going to be great. Ethereum, it's hard to be bearish on that. So the stock price has followed the Ethereum price as well. Now, the only thing I'm unhappy with is they've not staked and they've not explained what the strategy is yet. They need to do that relatively soon, and then also make it clear when their earnings actually are. Because some people were thinking Wednesday. There were some rumors out there anyway.
Oh, there was a ton of rumors that it was Wednesday. I mean, we kept looking at it like, are they reporting? Are they not reporting? Like, what the hell's going on?
So, but yeah, as long as Ethereum is fine, which it is, BMNR will be fine as well. Now the thing is, I don't know why, and I certainly wasn't expectations that I put out there. I wasn't expecting, of course, BMNR to be trading where it's at, but I also wasn't expecting like 70, 80, 90, $100, just because we knew, of course, where they did an offering, but we also knew that they were going to be diluting their own float to buy more Ethereum, which means that there's an artificial ceiling out there because they're doing this very aggressively. There is a time when they're going to let things run and ride. But right now, they said that their stated goal is to get that 5% of Ethereum, and they're more than halfway there. So I gave myself, this is a swing. I have some shares that I'll probably hold long term as well. We'll have to see. But I gave myself 2 years on this swing. That's an abnormally long swing, just because I wanted to give enough time for that strategy to play out, and also to be able to consume a crypto winter if we had one of these relatively soon.
Yeah, so what I was saying last night about BMNR is that I think everybody needs to take what's happening with a grain of salt. And if you are a short-term trader, that's your problem. Like, to me, this is something that does not have financial statements. You can't tell what's going to happen. And it's a very volatile, very risky asset that fluctuates. And you have to go into this with a very long-term mindset. And if you don't, you could get clobbered. And don't put money in that you can't afford to lose or that you really don't want to lose. Like, this is, to me, not the same thing as investing in Microsoft or Meta. Not saying that those don't have risk, but you can handicap it a lot differently. You can't handicap what's going to happen with BMNR because there's too many variables. And quite honestly, it actually doesn't have to follow any of them to any degree. So I'd be very careful on this. And this is a situation where I think it's going to take several quarters to play out. And I do the connect the dot thing. And I was not bullish on Ethereum until the Genius Act. And then I really started looking at everything, started looking at where everything is going. And to me, it makes sense. I just don't know that we're going to get there for another couple of quarters. So I think a few things have to fall in place for the stablecoin thing to actually really start working and for ETH to start getting burnt off, because then this could become a deflationary asset. Yeah. So we'll see. But it's amazing how many people are buying BMNR thinking it's going to 100 by the end of the year. Like, I was shocked.
Well, and to be fair, like, Tom Lee has put out some pretty outrageous price targets on Ethereum. He's bullish, and those price targets seem crazy to me. Even the predictions market with Bitcoin, unrelated. Well, I mean, I guess they have the 192 Bitcoin, but are very optimistic. So I'm optimistic, but I'm like, hey, this is more of a next year thing. And what I'm doing with it too, my strategy, Steve, and I'm sure you're doing this too, because the options premiums are ridiculous, are selling options. Doing the will strategy.
I was.
Okay.
I'm not now, because to me, there's no reason to. But once it gets to 56, 57 again, I will happily sell at like 64, 65.
Yeah. Yeah. This is, I'll be a little bit more careful here, and the premiums are not as juicy because I'm being careful, because I see more risk to the upside than the downside right now. But yeah, I'm going to stick with my strategy.
Let's take a look. Let me bring up the chart. What duration are you going out? A week, 2 weeks?
Just a week. Yeah.
All right. I have it up. I need to make it bigger for everybody. All right. So here's where I'm at on BMNR. Am I looking at puts? Oh, I'm sorry, everybody. So I don't know what my price per share is. I think it's probably 51, 52. I don't know if I got it down to 50 or 49. I would have to look. Let's say, argument's sake, anywhere from 49 to 53. It's probably where my average share price is. To me, writing calls at 58 or 59 it's just not that appealing. And I want a big spread because, look, this can go down $10. It can go up $10. So I'm kind of hanging out because I'd like to be generating between $1.25 and $1.50 a share on it. So I think for me, it needs to get to 55, 56 before I can safely get that in the mid 60s. So that's kind of where I'm at with that.
Yeah, my worst BMNR lot, I've got it in 4 different accounts, is 53.44. So that's maybe why I'm being a little bit more aggressive than you are, because that's my worst. I've got several in the 40s. Yeah, no, I like with the willing strategy. So I encourage investors to also have this mindset of like, know why you're in a trade or why you're in a position, what your goals are. And mine for most of my BMNR was, okay, this is incredibly volatile. Let me harness some of this volatility by selling options, both puts and also calls. And I will take those proceeds and buy more BMNR, which I'll be less aggressive with because that's not the goal with these, and also buy more Ethereum as well. But if I was in this, and I do have some that I'm just like not doing calls on, and I'm going to
These
let it
are
run.
such huge cash secure put premiums.
Oh yeah,
Huge.
yes,
So
yeah. I might write.
effectively,
I don't have a lot of cash, but I might write one or two of those.
if you were theoretically interested in buying BMNR, you could write a cash secure put at 46. All that means is you're putting up $4,600 because it's a batch of 100. And if it finishes at 46 or under next week, you get assigned 100 shares. Your 46 that's locked up in escrow gets called away, but you get the 100 shares of BMNR. But you're going to get paid $179 on Monday because the premium's $1.79 per share. So effectively, you're paying, what is that, $44.21 a share because you're making $1.79 on the cash. So, I mean, those are huge premiums. You basically get paid to buy the stock at that point if it falls.
Yeah,
And people utilize cash secure puts on stuff they want to buy at a cheaper price or stuff they even want to buy now, just hoping that, okay, it's around 46.75. Let me write it at the money at 46.50. I'm going to get paid $2.05 a share. So I'm actually getting it for 44 and change.
Yeah, and I see Rambler. You said I can't get any lower. Oh, you can't. I thought I read it as it can. It can always go lower, no matter what it is. You know, it can't go below zero, obviously, but the market can surprise you guys, both to the upside and downside.
According to Matt, everything can go lower.
The heat death of the universe right there, Matt Money. Always
Matt
the optimist.
Matty freaking Money. Yeah, I don't know, man. I really like Ethereum. I've been buying Ethereum. I've been buying BMNR. I actually started building out the position on QXO. I have a much more refined investment thesis on it now than I rambled on last week on the private thing. So Chris and I are going to do a complete deep dive. QXO is the one I'm really going after right now, but from an equity standpoint.
Yeah, I caught you talking about that just briefly, but I wasn't. I'd have to go back and listen when I have more time.
Don't even bother. I have such a more in-depth because I did the whole weekend. I spent researching it.
Okay, cool.
Yeah, it's really freaking interesting. Yes, I started a position on QXO. Yes, I did. But yeah, that's where I'm at. I mean, look, I'm excited for the rest of earnings season. I'm excited for the rest of the year, and I think we're going to have a good 2026. Unemployment's the only thing that's worrying me. I think we could have a recession if unemployment gets a little higher. Other than that, I'm not really seeing anything that could really drive us into a recession next year. But ultimately, other than unemployment, I'm with you where things could stay kind of like this till 2028, 2029. I'm with you on that camp. Because I'm not seeing this, the stuff that everybody's getting concerned about. And the Fed is cutting rates. You got 7.5 trillion on the sideline. At some point, that's come back into the market, at least $1 trillion or two.
Hey, Steve, I thought of something I need to ask you.
Yeah.
You were pounding the table for a long time about a dividend for PayPal. They have a dividend now. What do you think?
I'm happy that he did it. I'm not happy at the amounts. But it's a start in the right, it's a foot in the right direction. And the reason I say it like that is because I believe that they're going to be a dividend growth company, which is great. Personally, I would have rather done a 3-and-3 split, $3 billion to the dividend, $3 billion to buybacks, because the buybacks have not done anything for the share price, even though it has helped EPS expand. I would have liked for them to set the tone with a 3 or 4% dividend because there's no tech companies right now that are that high. Because Cisco and IBM have appreciated so much, their dividends are under 3%. So they would have been a de facto dividend company in tech, and they would have been picked up by the high dividend ETFs in addition to the normal dividend growth ETFs. And I think that the shareholders deserve a big dividend that they can plow back in and get more shares because of how screwed they've gotten on this company. So that's where I'm at with that. I think they made the right move. I just would have liked to seen it being a bigger dividend, and I just think you can do at this point. You're buying back the company in 11 years with your free cash flow if the shares stay the same level. So there's no reason not to split it half and half because you're still doing buybacks. You do half the dividend. I'm happy they did. I would have liked to see more. But
So with that, like, though, it's interesting to me. Like, I figured they'd do a dividend here, maybe in a couple of years out.
yeah, you were a little bit further out with it.
Yeah, and I was fine with an Nvidia-like dividend. So this is kind of a let's do a dividend, but let's make Steve and Roy unhappy because I'm like,
Right, because it's not enough and it's too much for one. Yeah.
So maybe it's a Goldilocks dividend there. We'll see. But
We'll see. I mean,
so what was
0.8%
really
is not so. It's like Apple, right? You're not buying Apple for the dividend. That's my problem with it. Like, if you're going to do a dividend, nobody's buying Apple, nobody's buying Microsoft, nobody's buying Nvidia for the dividend. They never have. It's just a kind of a nice kicker. Like, depending on when you bought Apple and Microsoft, you may actually feel those dividends. You're not feeling Nvidia's no matter when you bought it. Even if you're Tanner, you're not feeling it. So,
yeah, and like you said, it's going to be a stock that continues to grow that dividend because they've tied that to 10% of, it wasn't their free cash flow, but it's something very similar to that. I can't think of that, but essentially free cash flow. No, is EPS 10% of their EPS, I think. It may be adjusted EPS, non-GAAP. But so as they continue to grow EPS, of course, buybacks help with that too. Then you will see a higher dividend as well. And there could be like years from now, but we're looking at this like, man, got a dividend on top of this price appreciation. And that, of course, is the dream. Now, the other thing that was interesting too is previously they had said that they were going to use 80% of their free cash flow towards buybacks. Yeah. And now in this earnings call, they said 70 to 80% of their free cash flow to buybacks and dividends. They still have $15 billion in buybacks. It would surprise me. Well, maybe next year they'll go to $5 billion instead of $6 billion dividend buyback. I don't think that matters too much. I think really what this is it's showing off their tremendous free cash flow that they got this quarter. They will have quarter 4, which is amazing. And yeah, Spencer is the real me, I guess. So, and then next year, I think free cash flow is going to continue to step up. This is a trend with Alex Chris. If you look at when he came in, he turned the company around on the bottom line. The top line, it still hasn't turned the corner yet. But
is
that's
what I think it is.
That's TJ.
Is TJ here?
Well, it says TJ, the Will Trading Journal. So I don't know about that. Maybe. But it sounds like TJ. It's in his voice. It's a picture of him.
Yeah, I mean, that I could see that being him. Is this the real TJ? This is the real TJ, and you're bored. I'll send you a link.
Yeah. Love TJ.
So
you got all the Houstonians tonight, Steve. What? Or not Houstonian, I guess Texan. We'll make you an honorary Houstonian, though, TJ.
So TJ, go to hold on. Where can I send it? Where the hell can I send it to TJ?
The link, X.
Yeah, I guess I could do that. Hold on one sec.
So yeah, anyway, like free cash flow is one of those things where they had guided for $7 to $8 billion. That's right, yeah, for free cash flow, and I was like, they keep reiterating it, so I don't know why people are doubting them. And they came out with a monster number this quarter, and they will also next quarter as well. So yeah, this is like kind of showing off. Now, the other thing with the dividend, I would have preferred that they waited on it too to show it from a position of strength where they're actually trading in triple digits. That doesn't matter nearly that much. That's just a short-term thing. So
TJ, check your X. I sent you the link.
Yeah, YouTube, or maybe it's StreamYard, has been really weird because it shows everybody's at. And sometimes when I type here, when I literally type here, it'll say Crossroads, or it did. I don't know why. And then the other half of the time it has my at, which is why you thought it was a fake me earlier.
Roy, I didn't even realize when I went to X, I saw it. I didn't realize I unchecked the box. I'll download the video and you can throw it on your channel.
That's okay, man.
No,
Appreciate it,
once we're done, I'm going to download his email to you through Gmail.
I'll next time maybe, but it's fine. You're new to all this streaming stuff. You're doing awesome, by the way.
I appreciate. Listen, I'm trying to.
So you're already you have more subscribers than I do, Steve. Now
I got a big push. This wasn't all me.
a lot of
big
it was.
push from a lot of people.
You've been grinding. Yeah.
I'm trying. Listen, I'm trying to grind.
Yeah. Proud of you.
Thank you. The hard part is trying to keep up with Seeking Alpha and this at the same time. I don't know how the hell I'm doing it. Like, I'm still doing 5 articles a week.
Yeah, and that's why I'm able to do what I'm able to do, because I'm like, I've got other responsibilities too. And well, like the thing is, you can just talk about the same stuff every single time. But I know for you, like you actually put in a lot of research, a lot of time digging in. You're not just popping up there and getting the headlines and that's it. You dig into the numbers, which takes a lot of time.
Well, and I follow so many different things that it's easy for me to switch it up and talk about Verizon, then Energy Transfer, BMNR. Like I can talk about almost any freaking segment, but you know what I can't talk about nearly as well as somebody? Call options.
Oh, yeah.
What?
What's up, TJ?
Hey, over here on my computer it says the wheel deal, but on my phone it said the journal. Kind of weird, huh?
Yeah, StreamYard or YouTube. I'm not sure which is being weird. So,
yeah. How are you guys?
Good. It's good to see you.
I'm well, man. I'm well. I stopped going public for a while because my wife didn't like the way that she thought it was making me feel. So she was like, take the channel private and go really touch people, help people that, like, because I see their portfolios all the time because I do all these FaceTimes. And she was like, don't pay any attention with the pros. Like, we make way too much money. We have way too much money. We don't need that negative shit in our lives. That was like real talk from TJ the Will Deal's wife. And she was like, there's people that will never have the kind of money that we're blessed with. So you have to be careful the kind of energy that you attract. And I was like, baby, I thought she was going to tell me to cancel the whole channel, right? I was like, I've invested hundreds of hours into this shit. Like, are you serious? And she was like, no, just take it private. You have all these members and just preach to the choir for a while. Make sure the church is strong. That's the analogy she used.
Yeah.
And then you open the doors up to the public and finish the book, by the way, because you're falling behind schedule here.
When is the book going to be finished?
I should be done in about 3 weeks or so. I'm just,
nice.
I'm about 80, probably like legit about 80% done already.
Nice.
And it turned into, I'm like rambling, sorry guys, but it turned into probably like 30-40% of it's like my life, like how I got to this point. And then I do the meat and potatoes, like on the strategy. That's the easy part. The hard part was like telling the story, like how do you want to portray yourself? And I'm like, why don't we just roll with the truth? It's not all pretty, right? So it's the easiest thing to remember as well, right? So I was like, let me just rock with it. And I finally got the words to make sense. And what I'm comfortable with sharing, because I've been through some tough times in life, as we all have, right? We all deal with the vicissitudes of life. And there's ups and downs, there's peaks and valleys, and we're like the stock market. You know what I mean? The highs are real good, and sometimes the lows suck, and you want to maximize the highs and minimize the lows. Like, that's the whole thing in life, in my opinion.
Yeah.
And
and I love that you're transparent in that, TJ, because a lot of people think that they're hopeless. They think, oh, it's the market's rigged, the game's rigged, and against people that they didn't have a head start, a silver spoon in their mouth, or that aren't geniuses, and so I can't do anything. And then we share, it'd be too much for me to go into all my faults and failures because there's a lot. But we share some of that, and like, hey, we're just ordinary dudes that figured out something that worked for us, and you really figured out, brother. And other people can too. It might not be exactly what we do, but we can learn from each other. We can improve. We can figure out what works well. We don't have to just be hopeless because of where we're at. We could set our goals, build a strategy, and work towards that direction.
Yeah.
Well, I'm excited for the book. I will be buying a copy. So is it going to be hardcover? Is it going to be self-published on Amazon?
No, I'm doing 1,000 hardcovers, and I'm autographing each of them and sending them to the people that I know. Sending them to the people that I know personally, But right now my list is at about 110. So I'll be autographing a little, like a little personal touch, a personal note,
Right.
handwritten in my chicken scratch. So it is what it is. So, and I'll be sending because you guys helped get me here. Like, like
Are you
I
putting
did
it up on your website?
I haven't done any of the marketing ideas
Okay.
yet. Right now I'm trying to finish the book, and then I'll figure out like how big I want to try to make it as far as like putting marketing dollars. But I like Amit was a big reason, like he platformed me to a certain extent, right? I did the deal on his channel, and then I was like, hey, let's start with 250 grand and let's get it up to $1 million. And y'all all saw us make a shitload of money with that little portion of the portfolio. But I'm not really going to go into too much of that on the book. It's going to be about my life, and it's going to be about like, selling puts, selling calls, and how I've kind of like evolved as a wheeler. And then I started this idea with doubling my wife's account. We started with a couple 100,000, and I got it up to over 400,000 live and in color. And then just kind of like cliffhangering, like give me all a spoiler alert right now, right? But just cliffhanging to, I can't imagine where my life is now. Like I couldn't envision this, like having millions and millions and millions of dollars that wasn't in my bingo
Not
card.
billions, but yeah, no,
It
like
wasn't-
same. Yeah,
it wasn't in
I'm
my
like,
bingo card.
yeah, this isn't real right now. So
Yeah.
but I like it. It's a good
Yeah.
dream.
So, TJ, let me ask
It
you
wasn't
this.
in the bingo card, guys. Like I didn't think that between everything with the with my wife, and then obviously my father-in-law is extremely wealthy, and now having over $100 million of assets under management. I only show about 21 million on YouTube. It's surreal. It's surreal. And at the end of the day, it's just selling puts, selling calls, collecting premium, rolling when it makes dollars and cents. I never deviated from what got me here, because one of the mentors that I got early on said, kid, the things that you do to make money will not be the things that you did to lose money. So stay the course. So I'm like, this is what got me here. This is, you go to the prom, you dance with the one you took, right? So I'm like, I sell puts and calls, and I was like, I'm not going to be good at a lot of things, but I'm going to be great at this one thing. I want to go down as the guy that was most transparent selling puts and calls. And maybe it wasn't the optimal strategy for all market conditions, but I freaking made it work for me. This is the way that I wanted to run my hamburger stand. I had the vision, and I was willing to live with the results, and I put it all out there: the good, the bad, the ugly, the indifferent. I dealt with all the criticisms, as we all do as content creator wannabes. Because not all of us are Amit, right? like Amit's like a unicorn for this kind of shit. Nobody's got his work ethic. It gets insane.
He's a talent. He's on
So,
the
so let me ask you this: the market's run a lot, market's up a lot.
Yeah.
For people, do you think that people can still do the wheel strategy at these levels?
So I've obviously, I don't know how closely you've been following, Steve, but like I started swing trading, and then I started selling puts or selling calls mostly because I own shares. And then I started selling puts, and then it became known to me that was the actual wheel strategy. But I've since changed my approach. Like this is probably like the third or fourth iteration in my journey, I would say. Like a hard, like when you have I don't know if y'all golf a little bit, but then you go do like a tweak on your swing.
Swing change, yeah.
And it's tough, man. Like it's tough to do this. So I am of the camp, and I don't want to be like, I'm not a resident bear. I'm very Tom Lee as far as like perma bearish or perma bullish, sorry. But I just feel like at some point, one of the first books I ever read about investing was called The Intelligent Investor, and valuations matter, or at least they're supposed to. They used to.
Supposed to.
So I was like, I'm just
I'm in that camp.
Yeah, I'm not comfortable owning Palantir at these nosebleed levels. I'm just not. I'm not comfortable owning Hood at these levels. It's hard even to, like, my favorite company in the world is Tesla, but it's real hard to get comfortable whenever on the surface it really seems like the fundamentals are deteriorating, right? But then they could be on something really, really huge with their whole robotics, the robotics narrative. But I was like, I think that I could play a range though. So I learned how to graduate from the wheel strategy, if you will, to now I'm running strangles, naked strangles. And
I actually heard you.
I cover if necessary, but it's
had you on. It was either today or yesterday. I think it was actually earlier today. You were live. Were you live today? And I had you on in my office until I had a meeting, and I heard you talking about you just hit your first straggle on SoFi.
Yes.
I was listening. I'm still following.
Yeah, so SoFi, guys, it's surreal. Like I've officially made over $5 million on SoFi. It's my biggest win of my
Amazing.
career.
Love hearing that.
Glad you
And
stuck with it.
I still have, I feel like there's at least another 5 million of juice in there before my investment thesis gets challenged. And what I mean by that is like, how big do I envision like SoFi getting, right? Because I've been in since IPOE. And
Yep.
then I started selling puts and calls, and I was, y'all saw how many shares I had. Like I would display them, and it was irresponsible the amount of shares that I had with SoFi. But thankfully, it was sideways for a long time, and I was able to collect a lot of put and call premium. And then I just got very, very fortunate, lucky, if you will, buying a lot of leaps that I got, 200 or 300% returns on. So I have a lot of baked in profit already baked into the cake. My 401k is 100% SoFi. It's over 250,000 shares. So where you want to know how much I have in my 401k, just multiply 250,000, like 253,000 times whatever the share price is. And that's my nest egg. Then it's like literally just all SoFi. And I sell like 2 covered calls a year, and it's worked out so far. Right now, I just put the covered calls on, and they're for $37, 110 days from now or something like that. And
So for those that are unfamiliar, that are only really familiar with the wheel, can you break down the straggle for like real quick?
yeah, the strangle, is that what you're saying?
Strangle, yeah.
Okay, yeah. So essentially,
You
it's
said so. There's a straddle and there's a strangle. There's two.
Yeah.
So-
No. So I've been running naked strangles. You see, I used to run covered strangles. People thought that I was a wheeler. So like a wheeler is like whenever you find a stock that you want to own, you want to buy shares at a discount, you sell the cash secured put. So you do that over and over and over again until it hits your price. So essentially you get paid to name your price. That's a cash secured put. You get paid premiums. You take ownership of the shares eventually because you will get caught with your hand in the cookie jar. And then you're like, okay, I bought the shares at 10. Let's say SoFi back in the day, the glory days at 10, right? When we all thought it was worth 25, but it was trading at 10. So we own these shares at 10. And then we're like, well, let me put them for sale at $12.50. So they'll pay you money to do that. And that's called a covered call. It's essentially, it's a lot like real estate, like collecting rent. But the distinct difference is you have to put your virtual house up for sale. That's the difference where you can collect cash flow, right, via covered calls, a rental. You have a rental property in real estate. So you get paid going in via the cash secured put. You get paid going out via the covered call. And then the difference between what you paid for the shares and what you sold the shares, that's the capital appreciation. And that's why people love the wheel strategy in general, because it's a triple income approach. If you're dealing with the dividend stock, that's the Ford spoke to the wheel, right? I don't typically deal with dividend stocks because the math gets a little bit more dicey, because you're more susceptible to early assignment, because depending on how much extrinsic value is left on that contract, it could be outweighed by the dividend, right? So if you own stocks by a certain DX dividend date, it could get a little bit messy, if you will. So I've always kind of tried to shy away from dividend stocks. B, they typically don't have like the best premiums, because I'm always going for like at least 40% annualized returns if I'm going to sell a put or a call. Like if I annualize the premium that I'm getting, the juice has to be worth the squeeze, like for me. So a strangle, it works the exact same
real
way.
quick, for everybody in the chat who doesn't know TJ, he's helped a lot of people make a lot of money. And look, what he does is involved. It takes a lot of research. It takes a lot of fortitude, and you have to understand the risk. It is not risk-free.
Yeah.
But at the same time, I will say that he has helped a lot of people do very well. So if you're interested in generating income from your positions, you can learn a lot from going through his videos and listening to him. He's a wealth of knowledge.
For sure. And then this other thing here. So the reason that I moved over from Robinhood to Tasty Trade was 2 reasons. I didn't go on to Mitt's channel and say this, because we stopped doing the thing when I moved over from, because we had a little spot that we would do on Fridays. And whenever I got off of the Robinhood platform, involuntarily so I'll tell you all the real story here in a second. An exclusive on Steve Fiorillo, because he came on my channel a couple of times and did me a solid, because I was like, dude, I need like knowledgeable people on here, because we sell the same shit over and over. Like, show me how to actually like put these numbers on a spreadsheet and what do they mean, right? Because this guy knows how to read. cash flow statements and all this stuff like the back of his hand. And I'm like, I got grok, you know what I'm saying? So now I'm like super confident, but it's tough. Like I have to like really like focus on what the hell I'm looking at. Like I remember the whole Goodwill debacle with SoFi a couple years ago. We were in Vegas and SoFi had written a lot of goodwill off that quarter. So it was, people were like I think it was about the Technises or maybe Galileo possibly.
It was either my first quarter holding SoFi or it was just before. So it would have been, I think, early 2023.
It was around Amit's birthday because we were in Vegas and I was sitting having breakfast with Tevis at the Aria with Tevis, Fundamentals of Investing. And I was like, bro, like talk to me like I'm a Labrador retriever. Like, what the hell is this goodwill exactly? And he just like broke it down for me. So like Tevis was my grok. Shout out to Tevis at the time. I made sense of it because that was like one of the first times that I felt like a little bit bearish on SoFi because there was a lot of information that I didn't understand. And then there was like some stuff that was like dilutive, not dilutive. And then we got to admit, SoFi's not been really good at explaining things that they do. So you need the people like the Crossroads, the data-driven investings, everybody to come together and have 2 or 3 podcasts to make sense of what the hell they're doing or not doing. And the one thing that I think that Robinhood's always been superior is with the information that they give you. So it's almost like they help, Vlad comes on people's channels. So he gets the word out. Anthony Noto is like, he plays it a lot tighter to the vest. They just have different styles. But anyway, guys, the reason that I got kicked off of Robinhood was because I featured my buddy's account on my channel. So I literally logged onto his account from my computer and I traded his account on a live and they sent me a couple of warnings and I did not care.
Wow.
Because the migration to Tasty Trade was already happening. So I was like, look, I help friends and family make money. It just is what it is. I don't think I'm ever going to get in trouble for making people hundreds of thousands and millions of dollars. I just don't see the logic in that. I don't run a Ponzi scheme. I'm not a shyster. I don't have anything like that going on. I just happen to be really gifted at selling options. So people that know me in my circle, they wanted to take advantage of this brain that I have for selling options. So sometimes, not to like incriminate myself or anything, but I may or may not have pushed buttons for people without having the licenses to do so. with their authorization. So it turns out that that's kind of frowned upon if you don't have something called an LTA, a limited trading authorization. Well, there's brokerages like the Charles Schwabs of the world, and we try to do this with Charles Schwab first, and then there's might be Levitt Tasty Trade now. They have a limited trading authorization that basically says like this in layman's terms. Steve, you're an idiot because you're willing to give TJ permission to trade your account. So if he loses money, don't go crying to mom and dad. You know what it is you signed up for. He doesn't have any licenses. He should not be doing this, but you guys are basically both accredited and you're willing to just let bygones be bygones. It is what it is. I don't charge for my financial advice or any of that stuff. I'm just going to do you a solid because we're cousins or whatever. So you can fill out a limited trading authorization with some of these brokerages. And Robinhood was just not willing to do that for us.
That's frustrating.
They would not do it for us. So guys, over $25 million has already migrated over from Robinhood to Tasty Trade, and we got another 75 million on the way.
Yeah, I mean,
and it was annoying to me because Robinhood is so easy to use, right? It's like Apple, but at the same time, real quick, Roy. But the thing is we were arguing over a couple of things. It was the amount of contracts that I could sell at once. It was 200, and I was like, it's real hard when I have 8 accounts that I'm trading. And I have to go try to match all of those fills. It's like a lot of extra accounting for me. Why don't you just let me do at least 1,000 contracts at a time? I can pull all the money together. We don't have to go because we have a family office. So we just pull all the money together, have one big master account, have $100 million in Robinhood and under one account and call life good. And then we'll deal with the accounting on our end. And they just weren't hearing it. So Tasty Trades, like, they gave us the parameters, what we could do, could not do. And they even gave us the ability to sell up to 5,000 contracts at a time. But there was going to be fees, right? With Robinhood, the fees was like 4 cents a contract or something like that. With Tasty Trade, I believe it's a little bit heftier than that. but also the fact that they were going to give us portfolio margin. This was the reason that I wanted to move from Robinhood to Tasty Trade, was simply because of portfolio margin. Steve, you're a lot smarter than I am. So is Roy. If you guys want to explain,
but okay.
if y'all want to explain to them what portfolio margin is, as opposed to just a regular margin that you get on Robinhood, or do you guys
So
want?
I'm sure that it's different across different platforms about what they're going to give you versus the assets in there.
Yeah, so it's about 4 times the leverage, sometimes up to 8 times the leverage.
Yeah,
So,
like you start and look, I don't really mess with it, and some brokerages will give you, like you said, up to 8. It's very uncommon to get 7 or 8. Most don't even really want to give you 3x.
yeah. So essentially, if you sell a cash secured put at $10, you need 1,000, because it's 10 times 10, right? 10 times 100. So it's $1,000 in capital is what they earmark. They put it like an escrow, if you will. Whenever you have portfolio margin, you might be able to do that same trade for like $200 in escrow, or they call buying power, right? So for like $200, $300, $400, depending on the underlying, right? The riskier the underlying, the more they want to earmark for you. If they feel like the stock is less risky, it's a lot like when you see margin maintenance. If you ever pull like Hood, you pull a Tesla, you pull Nvidia on Robinhood. If you scroll down to the bottom, whenever you do the look at the stock, it'll tell you what the margin maintenance requirements are of that particular stock. So one issue that we kept having with Robinhood was I sell cash secured puts and I do it on margin. So you don't have to pay interest on it. So you're getting more money. But then you wake up overnight and they just change the margin requirements in that particular stock. So they put you in a margin maintenance situation. So you got to go trim contracts, because essentially the algorithm doesn't like your risk profile. So there's something sketchy with the underlying that you're in. And they'll just change the margin requirements. It became real tough for us. So I was like, well, what about portfolio margin? Why don't you give us portfolio margin? And Robinhood just doesn't want to deal with portfolio margin for whatever reasons for them. But essentially what I do is I sell puts and calls on margin. I don't have to earmark the money, right? It doesn't have to go into escrow. A. B, I can sell both the puts and the calls simultaneously. Whereas on Robinhood,
Cash account, you cannot do that. You have to have margin turned on.
Right. You can't, but I'm saying you can't sell a cash secured put and a covered call without owning the actual shares. On Tasty Trade, I can sell the put, I can sell the call. They look at the actual cash of the account. They know that we can turn this position covered at any time. So as long as you're playing within the parameters of your, how big your portfolio is, they give you a lot of rope. But again, the issue is you can hang yourself if things go really bad. There's a huge spike in implied volatility. So whenever I made that change, that's why Amit was like, hey man, I think that's getting like a little bit too advanced. There's a lot of newbies on my channel. I think we don't want people to follow you into stuff and then they don't know how to deal with it and they could be blowing up their accounts. So he didn't want to really promote that on his channel. And I totally agreed. So that's why.
Yeah, I mean, look,
everyone's comment on his channel and they're like, oh, when are you going to bring TJ the Wheel Deal back on, all this stuff? It's because
what you do is very advanced.
Yeah,
I mean,
now it is. It didn't used to be, but now it is. Yeah.
It's very advanced.
So, but it's just essentially, it really is just selling puts and calls. And then the big thing that I have to be on top of is just my portfolio, like my bankroll management. So I have to be really, really cognizant of my bankroll management. And then it's CVAR, like the one metric that I look at offline all the time is called CVAR. It's conditional value at risk. So right now I have about an $18 million portfolio, and my notional value, my total collateral, if you had all the puts, is about 70 million. So it's right there where Tasty Trade's like, okay, you have different expiration dates, so this can't all come to a head at once. But I get emails and be like, hey, you might want to trim a little bit because this is getting a little bit ridiculous. But then they see how far out of the money these puts are, so they give me a lot of leeway. And that's how I was able to make the $1.5 million in 90 days. It was actually 1.7. So I was negative 200,000 going into the trade. Now we're plus 1.6, 1.5. and without owning any shares. I just literally built a highway, guys. And I said, I'm willing to buy SoFi at 27 or 28, whatever it was, and 36. I feel like it's going to hang out at these levels for the next 90 days. I put the trade on early. I adjusted it 3 or 4 times. And at the end of the day, we're able to milk about 1.6, 1.7 million in 90 days. And now I have 3,000 short calls at 27, 30 days from now. So it's an agreement to buy 300,000 shares of SoFi at 27. It's real simple, right? So if it's below 27, I'm on the hook to pony up money for 300,000 shares. If it's above 27, the extra $250,000 they paid me to do that trade is ours to keep. And it's what I do, man. I sell puts, I calls, I collect premium, I roll when it makes dollars and cents. But what helps me is the conviction that I have on these stocks, because you spend hours and hours and hours listening to the Steves. I have probably read 10 articles this man has written on SoFi. On Seeking Alpha. Like, Steve puts out a bunch of damn articles with Seeking Alpha all the time. So I'm like, dude, he put something. Data Driven puts something, because Data Driven likes to write, Psalm 23 on X every day, right? So I go in there and I read the book of Psalms, Data Driven Investing's version, and when I read, it's about one of the stocks that I'm invested in. So it really helps you to solidify your investment thesis by challenging it with somebody that's got potentially even conflicting points of view. Because Steve's been critical of SoFi at times, kind of like, hey, like, are we going to get the technology sector going? If not, I mean, how the hell are you going to even call SoFi technology, right? So I like that he was willing to challenge his own investment thesis, because he's been extremely bullish on SoFi, but he's also not blind and dumb, right? So he's like, if shit isn't adding up, like, we need to talk about it, even though it might not be the popular thing to talk about, because it almost feels like you're being the resident bear at times. But that's what
and when I do it, I'm still a shareholder. I'm just critiquing a company,
Yeah, absolutely. So
Yeah,
anyway,
I was likewise critical, and I think rightfully so, that we've seen where the technology platform is. That's the one thing, Steve, when you asked earlier about SoFi, that's the black spot. And it still is, even though it did better than I expected, because I expected nothing out of it, literally. I think next year it'll re-accelerate some, but yeah, the nice thing is loan platform business means that it doesn't matter nearly as much. And I agree with you, TJ. I think there's plenty of upside left in SoFi. Like, this is not it's kind of, it's not cheap.
Yeah.
But that doesn't mean that it can't go up more, and you can see the real strength of those earnings. I think the market tends to, get pretty excited when it has a ridiculous beat and colossal acceleration in revenue for one quarter. But what really gets institutions very excited is when they see it over multiple sequential quarters, and that's what we see with SoFi. So, man, it's a beauty. And
go ahead. Do you guys mind if I ask y'all to talk about a stock? I'm not sure if Steve's in it. I feel like Crossroads might be in it.
I can. It'll probably be my last topic, but sure.
Okay.
Yeah, probably same here. What stock?
BM&R.
Oh yeah.
Did you guys already talk about it tonight, or
No,
no?
Yeah.
Let's do it. All right, Roy, you go, then I'll go.
Well, do you have like questions, concerns with it, or just overall?
So there's a couple of things. I mean, we're heavily invested in BM&R. I hadn't owned shares in a while, but I saw an opportunity there. I went down a rabbit hole, dude. I went down a rabbit hole with Ethereum for like a week, maybe 2 weeks. And I'm talking about a rabbit hole, like 3 or 4 hours a night, just ingesting information. And
TJ, can I give you a suggestion before we both get into it?
Okay, sure.
Have you ever heard of the podcast Bankless?
No.
Okay. You need to go on their channel and watch a couple of episodes.
Mm-hmm.
I'm going to send you the one that I thought they're all good. I'm going to send you one. It's called Digital Oil. It'll change. Like, I don't even know if I should. I'm actually kicking myself for even bringing this up, because I feel like if you watch it, you're going to go even crazier than you probably did.
Have you guys seen my position in BM&R or no?
I have not.
I'm almost embarrassed. Can I show it or no? Do you want me to show?
If you want to, I don't.
Y'all know me. I'm transparent. I don't care. So I'll go here. I'm almost embarrassed at how irresponsible it is.
You know it's bad when he says how irresponsible it is.
Well, while you're pulling that up, like what we were discussing earlier, is my strategy with BM&R is mostly the will strategy. Just because I mean, that's a stock that kind of has a little bit of a cap for a while, just because
Right.
they are diluting intentionally to buy Ethereum, and the
Right.
premiums are juiced. So it's been good.
Is the white screen up or no? Because I can't see on
It
mine.
is, but I can't read what it says.
Okay, let me go a little bit bigger. Is that better?
Slightly.
How's that?
900
There you go.
968
Is that
grand?
better? Is that better?
I think
Yeah.
so.
What is that? 968K?
Yeah. So BM&R got 40,000 shares at $56. So why? Because I don't know how to pick the bottom. God bless you guys if y'all
Who
have
does?
that
Who
kind of cap.
does? Nobody can pick the bottom, and nobody can pick the
Dude, everybody on my XP claims they can. So
top. Yeah, it's not true. You know that.
I got an internship that I could offer those guys. But anyways, I've got the shares for sale at 62 for next Friday. I'd picked up like 36 grand. I've already made about 200,000 selling cover calls on this thing. The premiums are absolutely juiced up on this
The
thing.
premiums are crazy.
And then I bought 600 leaps at 75, 441 days out. So another mil. So probably like approaching 3.5 mil in BM&R. My idea is to sell these shares at 75. But before I do that, I want to get to 1,000 leaps. So I want to ride the 1,000 leaps up to the promised land. And I'm going to run the poor man covered call on probably half of those leaps. And I want 500 leaps free to run, because I don't know. I went down the rabbit hole, and then I really didn't understand the MicroStrategy thing. So it bothered me. It bothered me that I watched, everybody from Jesse Dow to probably 20 hours of interviews with Michael Saylor himself.
TJ, you have my phone number. You could have called me.
Yeah, sometimes I'm just stubborn and dumb. But essentially, I'll take this off now. But essentially, what happened was, I feel like I didn't make any money with MicroStrategy because I just didn't understand it, and I tried to, but it felt very Ponzi-ish to me. Like it just did, because I just couldn't understand like MNAV and stuff. Like I have Grok, right? So I understand the calculation and stuff, but I just couldn't grasp it, if that makes sense. Like it's kind of like, like I don't want to get all biblical or anything, but because I don't know what kind of audience you have, and I don't want to offend anyone, but I also don't apologize for being a Christian.
Yeah, let's keep it off.
Yeah, no, but what I'm just saying is, like, there's a saying though. It's like there's one thing to like know about God, and there's another thing to know God. So there's another thing to like know about MSTR, and there's another thing to like really know what's going on there. And I feel like there's people that understand, like they understood what Michael Saylor was doing, and I just couldn't grasp it. So then Tom Lee comes, somebody that got me excited about Bitcoin in 2014. And he's like into this thing. He became chairman and whatnot. And I'm like, dude, Tom Lee's like never wrong. That was my whole thing, right? That was literally my investment thesis initially. I'm like, dude, little Tom Lee with the crazy glasses is talking. I got to listen, because this dude with the puffy hair is never wrong, it seems. So he's like, tries to explain it. And I watch, I don't know, probably 10 hours or so of him talking about what they're doing. But I feel like I only grasp maybe 25%.
All right. So this is the link for everybody for the podcast that I had said was one of the best ones that I've watched on Ethereum, when I went down the very dark rabbit hole of locking myself in a room. I didn't actually lock myself, but obviously the room you see me sitting in is my office. And I closed the door and I sat in here for a good weekend and went down a crazy rabbit hole, like crazy. And then I started going down more and more, and in the car listening. And I got to tell you, I have a pretty good understanding of it. And this podcast will blow your mind.
I'll definitely check it out. But bottom line is Stanley Druckenmiller, to me, is like one of the absolute goats, right? Like he's on the Mount Rushmore of investing for me, right? We all have our people. He's my guy. He is real famous for saying invest and investigate.
Mm-hmm.
So people in my WhatsApp group were telling me about BM&R when it was like a lot cheaper, like $10, $20 cheaper. And I was like, dude, I ain't got room for that shit right now. Like, stop it already. But then I started going down the rabbit hole because there's a lot of smart people in the chat. And I was like, dude, I know these guys aren't idiots. I see their portfolios. They know how to do this thing better than I do. I have no idea why they even pay me money to talk to me. Like, I'm like, most of these people, I feel like they're better at selling options than I am. And they're like, dude, you need to get into this BM&R. Mr. G, Ron, shout out to Ron. He was like pushing my button. He's like, dude, you don't want to miss this thing. I know what I'm telling you. And I went down the rabbit hole, but I feel like I'm still not there yet. I want to give a shout out to Roy because you were with Tevis, Tanner, and I believe Data Driven Chris. And y'all did like a members only podcast, and I'm members with several of these channels. So I saw it late night one day, like literally like 3 a.m. Something popped up on a notification because I'm doing like that drunken scrolling, even though I'm not drunk, but like I'm like sleepy scrolling and wife's asleep. And dude, I go get my freaking Bluetooth thing and put it in my ear because I know my wife's not going to overhear this crap at like 2 or 3 a.m. And I watched that podcast and like the light went off, like it started clicking in my brain, you know? And I was like, dude, I feel like I'm underinvested. And I was up like 10,000 shares, and now I'm at 40,000 because of that damn podcast. And now I'm at 600 leaps. And I'm afraid to go because I'll go watch it. But I feel like I'm going to be moving shit around, and you're going to see 250,000 shares or something retarded, right?
Here's what I'm going to tell you. If you watch it, you're going to have to call me tomorrow.
If you guys can take it, Roy, tell me your 5-minute, your elevator pitch on BM&R, and then we'll go with Steve because I know that you might have to go, Roy, and I don't want to. Get what's in your brain.
Let me share the screen, Steve.
Yes.
All right, so it's a pretty simple thesis. Once you're ETH build, you're already ETH build, so that's a longer thing, and I won't go into that. And if somebody's not like you're not ready for BM&R, which is fine. Like this isn't. I'm not saying this is something that belongs in every portfolio. It does belong in mine. But the thesis basically is once you're like, okay, Ethereum is absolutely where things are being built and will continue to be built, and we will see continued institutional adoption. That even the United States government is getting out of the way, stable coins, everything. There's a lot there. Once you get that, you're like, okay, then should I just buy Ethereum? Yes, but should I also look into a DAT as well, a digital asset treasury? Now, what we know, and it's a lot easier this time around because, like you, I miss MicroStrategy, now just strategy. And we can see that there is always a consolidation, or there has been, just from MicroStrategy. You can look at just Bitcoin treasuries here, and we can see this is they have one on volume, trading volume. Do you see there's all these other companies out there? Do you see any kind of volume at all for any other company? You can barely see it. Some of these will pop up, from time to time, but there tends to be consolidation at least in Bitcoin, in one major play. And we're seeing the exact same thing playing out in Ethereum as well, where there's consolidation as far as trading volume. This is one of those things where they do weekly reports and they talk about the trading volume. Now, it is down significantly this week as well. And actually, SBET did pretty well, but look at the relative difference there. And the reason why this is happening is there's two things. On the retail side, retail tend to flock towards similar stocks as each other. There are stocks that are loved by retail, and there are stocks that retail just ignores, even though they're great companies, great stocks. They continue to do well as well. It's the way human nature works. And institutions are also like that. Now, they're a little bit more broad, but they tend to adopt companies rather than, if we look here, here's all these other names. SBET's, of course, the biggest one, Ether Machine, ETHZilla. They'll have different pops at different times. But when BM&R really came on the scene and Tom Lee took over, he is a name that both institutions and retail understand, trust, and appreciate as well. The strategy was crystal clear with what they were doing. Of course, they have weekly updates as well. Some other companies do too. And then the last piece of this is this MNAV. So if we look at their MNAV as well, they're not actually at the highest right now. ETHZilla actually is above, and BTBT is kind of a combination DAT more so than BM&R. But this right here, a lot of people were like, hey, why don't you go after companies that are extremely undervalued in terms of MNAV rather than at MNAV right now? And the reason why ultimately is this is an asset. The ability to actually trade over your net assets under value is basically giving you the ability to dilute your shareholders for an overvalued stock and use that to buy undervalued Ethereum, which should appreciate over time and also give you stakeholder returns. And as a result, you have something like this, where you have Ethereum holdings by company. It continues to climb. Now, they did not buy too much this week, but you look at all these other treasuries. One thing that BMNR has done that others have not is they've done an effective job of continuing to buy and accumulate Ethereum. These others ran out of gas early on, and then SBET started trading under its MNAV, and all of a sudden it was stock. ETHZilla kind of broke out of this, by the way, because they actually sold Ethereum. I don't know that BMNR would ever do that unless it was trading way under MNAV at that point, but they are willing to, of course, buy back the shares. They always have some cash. They have some creative deal making. SBET's also done this as well. But yeah, just because of the consolidation, typically into two plays, it's playing out just like what we've seen before with MicroStrategy. Of course, keep an eye. Like if we see, it wouldn't shock me if SBET actually is able to break in and make this a duopoly with Ethereum, and that's fine. Now, the very last thing is, there are some bears out there that are very bearish and to put out short reports on BMNR and also other names. And their thesis is not anti-Ethereum. It's just that competition here, there's too much competition for the same resources. That's the dumbest argument ever. And you know why? Because unlike other companies, where there's a lot of competition, oh man, this is bad. This gives them the opportunity that all these other companies, supposedly, if they weren't trading under NAV, would be buying and accumulating and staking Ethereum, which is great for price accumulation in terms of Ethereum. It's more than a Ponzi scheme, but there is a small element in that. So competition here is actually not a bad thing at all. So that's my 5-minute, like, why BMNR, why a minute. Now, I'll add like one little thing too. I'm in BMNR. I'm also in Ethereum. I'm not going to like sell either for the other. But you really can't you can't wheel Ethereum. It doesn't work.
Right.
You can wheel BMNR, and the premiums are juicy. That's my strategy.
And how much would they make staking? Because that's another thing that I call staking in my mind. It's like the cover calls of Ethereum. Like how much are they able to make with their Ethereum hodl, if you will? So
there's actual real staking, which they will do a lot of, just because it's healthy for the ecosystem and it's necessary, and it's part of their documents as well, what they said they would. They're going to make a little bit under 3% yield. Now that yield does fluctuate over time. They will also probably liquid stake. Liquid stake is not actually doing staking, but doing something like staking. That's a proxy. There's several different ways that you do that. But if you look at SBET, for instance, they have a higher than whatever the actual traditional yield is for staking. And then lastly, you can also do some lending as well for the Ethereum project. I think that what they've done is basically look at an array of different options, including maybe mimicking what ETHZilla does or SBET or others. I don't think they have exclusives with what they have there. But I think likely they're going to be staking probably at least half of what they do, just because they need to be a validator for the network, and you do that through staking. But the other part is, it wouldn't shock me if they do some measure of liquid staking and a little bit of lending, although that can get risky too,
And what about mergers and acquisitions? Is there, because like when I was really big into the miners, still am on Riot. Riot's been, that's the stock I've made the third most amount of money is on Riot platforms. Kind of crazy. But I always thought that it would make more sense if like Riot and CleanSpark and Marathon, if they would have all just like merged and created like a superpower in the industry, if you will, because it was so capital intensive, but they all had really good things about them collectively. So I was like, well, you can go from good to great if y'all are willing to like merge, right? Join forces. Like this was me playing like CEO from the outside, right? Yeah. There's a reason that Jason's the CEO and I'm not. But
yeah, there's some element of that. But usually those type of things, a consolidation in the industry usually happens during a bear market. In this case, it'd be a crypto winter. We've not had one of those yet. So next crypto winter, you'll see some miners consolidate. You'll also see some digital asset treasuries consolidate as well. The nice thing about the DATs and also the miners too, because they do stake and buy and hold depending on the strategy that they have, is their actual assets are worth something. It's not just that that'll go to nothing. Now, in a crypto winter, the Ethereum price will collapse. Hopefully, it'll be significantly higher before winter hits. Probably will be as well, but yeah. They even mentioned it, by the way, in their Investor Day documents back in August, that part of their strategy would be to buy other digital asset treasuries right around their NAV as well, if they get an opportunity.
Super cool. What about you, Steve? What's your are you gonna what do you call orange pillet, or what do y'all call it? You gotta-
Before you get started, I got to head out, guys. But it's been a blast, Steve. Thank
Roy,
you.
I'll see you tomorrow night. Thanks for coming.
TJ, great seeing you. And audience, you guys are the best. Later.
Appreciate you, Roy.
So I'm going to go in a different direction than Roy and then weave it back to what Roy said. So for me to really understand the BMNR investment, you have to go down the Ethereum rabbit hole.
Right.
So I'm putting a link to my research. If you want to read it, I put everything in there. It's probably 2,500 words. I'm going to give you the freaking cliff notes. So basically, right now, my investment thesis is contingent that we're going to see mass scale adoption at an institutional level for Ethereum. Ethereum is a decentralized blockchain network, which is programmable software and a development platform. The core innovation that separates Ethereum and Bitcoin is the smart contract system, which are open source programs that execute automatically and run continuously across the globe. So, though Ethereum is a blockchain, anyone has the ability to create digital assets and decentralized applications, which are DApps, without relying on traditional banks, corporations, or intermediaries. That's one of the cruxes of my investment case. And unlike traditional systems that can block access or suffer downtime, Ethereum's network is designed to create maximum uptime while rejecting any attempts to alter contracts. So the Ethereum network was, can you hear the blinds going in the background?
A little bit. You have the window open? Or?
Yeah, hold on. Oh. Yeah, my office gets hot as hell for some reason. So that, and once I started hearing, I'm sure you guys heard it. So Ethereum network was built with scalability and efficiency as the core component with layer 2. So you probably hear layer 2 a lot when it comes to stable coins. And in 2022, the Ethereum network transitioned from proof of work to proof of stake and operates without a single controlling entity. So Ether, which is ETH.USD, is the native cryptocurrency on the Ethereum network. And users utilize ETH or ETH to pay transaction fees that are referred to as gas. And those incentivize validators to process and verify network operations. If there is more network activity at a certain point, more ETH may be burned than created, which could create a deflationary asset. And the supply dynamics of ETH encoded in its protocol, and there is an issuance cap, which is designed for long-term sustainability and avoids potential security risks. The maximum annual issuance of ETH is capped at 1.51%. And on a net basis, it's been averaging 0.09%. And Ethereum hosts right now, or when I did the research, 767 billion in assets, which represents the largest total value store across any blockchain. The use case for Ethereum continues to expand as it provides the ability for peer-to-peer payments and asset transfers, which allow users to send and receive digital cash, stablecoins, and other digital assets globally within seconds. So companies such as Shopify, MasterCard, and PayPal are integrating on their level 2 protocol called Base, which allows consumers to spend stablecoins with millions of merchants around the world. Ethereum has already become the largest platform for stablecoins and hosts roughly 60% of all stablecoins. The use case for tokenization is also huge because over 80% of tokenized assets exist on the Ethereum ecosystem. And that includes 10.2 billion of non-stablecoin tokenized assets. Circle, which is the biggest stablecoin right now, which is USD or dash whatever, that's on Ethereum layer 2 also. So I was not an Ethereum bull until July when the Genius Act got signed into law. And now there's a federal regulatory system for stablecoins, which removes regulatory uncertainty, which has historically reduced institutional participation. And this is the most crazy part about the act that got me bullish. The act prioritizes consumer protection by mandating 100% reserve backing for stablecoins with liquid assets like US dollars or short-term treasuries. So stablecoins have to be backed on a one-to-one basis by the number one reserve currency on the globe. So now I start getting bullish about Ethereum because I'm looking at it as, okay, we have an administration that's going to be here for another 3.5 years. We have David Sachs, who is the crypto AI czar, crypto and AI czar. We know his stance from watching All In. We know Brian Armstrong's stance, who's friends with him. We know Chamath and all their stances. We know what companies are building on it. SoFi is issuing their stable coin in Q1, and they're trying to have it be cross-border payments. And the way I look at it is, if stablecoin adoption happens and we get it on mass scale, it will drive the price of Ethereum up because Ethereum will truly become a deflationary asset because more ETH will get burned off than is issued because they can only issue 1.51%. Then when we start hearing Vlad talk about tokenization, you start going down the rabbit hole is if this guy can pull this off, this is a completely another vertical, which is going to create traffic on the Ethereum network that's going to burn ETH also. So then I go down the rabbit hole of BMNR. And if I'm bullish on Ethereum, should I be bullish on BMNR or not? So the difference between me buying Ethereum directly, which I have been buying as recently as 2 days ago, or BMNR directly, which I bought more 2 days ago, is I cannot stake right now, nor do I know how to stake through DeFi or restake, nor can I become, I guess I could become a node, but a validator. Like there's all these different things. I have no interest in any of that stuff. So BMNR is going to control so much. They're going to become the de facto node and the de facto validator. So they're going to be generating income from that. They're also going to be staking. So they're going to get, I believe, 3% from stake, which becomes immediately accretive net income. They're also going to be able to restake and restake through DeFi, which from my research could yield them roughly 4 to 6%, maybe 7% in some cases with some DeFi projects. And you'd have to take what I say with a grain of salt, but some of the stuff that I've seen is 4 to 6%. So then I started looking at it as, okay, if they own 5%, if they're generating all these network benefits, and if Ethereum starts running, are they going to get a premium because of what they're generating and how important they are to the network? And I feel that they will. But I'm basically buying I own more BMNR on a dollar basis than I do Ethereum, probably 3x more. But I'm still buying both. And that's kind of where I'm at with my thesis on this. It all depends on stablecoin adoption and tokenization. If that doesn't happen, I don't think this works. But to me,
so are you in the camp that? Because I mean, I don't think aside from maybe Kathy Wood, I don't think I ever heard anybody more bullish on Bitcoin than Tom Lee. But what got me super excited was when he's making a case for Ethereum surpassing Bitcoin, right? Like as the
I don't know how to handicap that. You know what I mean? Like there's no balance sheets, there's no income statements, there's none of that. So it's hard for me to like. I'll give you an example. Okay, when you were talking about valuations, okay, it makes me look at this valuation, specifically Meta to Broadcom. Okay, so right now, basically the same market cap. They're about $100 billion apart. Broadcom's a little bigger right now. Why are they even in the same category when Meta does 4 times the cash from operations? Meta does 107 billion in cash from operations. Broadcom only does 25 billion. Yet Broadcom's a bigger company. Broadcom does 25 billion in free cash flow. Meta's doing 44.8 billion with spending 63 billion in capex. So it goes back to your point. There's companies out there that just don't make sense on valuation on both sides of the spectrum.
Right.
I can't build out numbers like this for Ethereum or Bitcoin. So I have to go with a lot of intuition, a lot of what ifs, and where I see the base case for this. Bitcoin, I only see as a store of value, only because people have it in their brains that's a store of value. Bitcoin takes too long to settle. You can't do anything else with it. To me, it's bullshit compared to Ethereum. And I've always said, I've said about when I was on the XRP camp, et cetera, et cetera. But you're never going to have a smart contract system on Bitcoin. You're never going to have tokenized, or you shouldn't say never, but we probably won't have tokenized assets or stable coins based on Bitcoin. Maybe with their Lightning Network, they may have stable coins, but I think the smart contract system is so valuable on Ethereum. That's why we're going to see the lion's share of tokenization assets and stable coins built on Ethereum. And that's why I got bullish Ethereum and BMNR. So my whole long rant is a play that over the next year, we truly see real stablecoin adoption and more Ethereum gets burned off and it drives the price up. And there's more liquidity in the market, more people are using it, more people are issuing it. And if that goes up, it should drive BMNR up, and maybe it gets a multiple the way that Strategy did at one point.
So can you just talk to me real quickly, because I got to run because my wife wants to start a Netflix series. Can you talk to me about this? The government's going on the blockchain, right? Because I saw like an article, or Tom Lee, somebody talked about it, and then I tried to go down that rabbit hole. But can you give me like an actual, like a use case example of what does that mean? The government's going on the blockchain. Like what is one facet of the government that's going on the blockchain?
So I mean,
blockchain.
I think the easiest way to really look at it would be, and I hate doing this because everybody's got a different interpretation. My interpretation is going to be different than the next person's. All right. I'll use real estate, for instance.
Okay.
You buy a single family house, you could theoretically tokenize it and create X amount of shares on the blockchain and allow people to invest in it.
So kind of like a REIT,
without the REIT structure, yes. Direct ownership, where you can buy fractional ownership in something through it. And you could do that for any asset on the blockchain, and it's all public information. You can't change it, you can't forge it, and you can sell it on a moment's notice, end-to-end trackable. So I think that when it comes to tokenization assets, we're going to see, like, do you follow sports cards at all?
My mom was a real big collector.
Oh, dude, if you have old cards, you and I
have a buddy. I have a real good, the guy who introduced me to my wife. He has a Michael Jordan rookie card that he's hoarding, and he gets it priced out, I guess. And it's just amazing to me, like the thousands of dollars that people will spend for a freaking top.
I'm gonna blow your mind right now. So Kevin O'Leary and this guy, I forget his first name, but they created the Wondershine Index. They bought a Michael Jordan and Kobe Bryant card for $12.9 million. Okay? So they created a Wondershine Index. Right now, they have purchased $20.9 million worth of cards, and they're saying it's worth $26.6 million. This number was $24.9 million a week ago. Now, this is the card. Their purchase price $12.9 million. They're saying the current value is $16.38 million. There's only one of these in the world. It's a dual logo, man, dual auto, Jordan Kobe. There'll never be another one. Graded by PSA PSA grade 8. I think they're going basketball because it's a global sport, et cetera, et cetera.
Right.
So now I think the long-term goal is they're going to build this out. And the common theme around all this, they're all 101s or 1 of 25s, right? So this card's out of 25. They bought it for 200 grand. This one's out of a 101, Kobe logo man, et cetera, et cetera. Not only are there's never going to be another one of this because it's a 101. They took it off the market. Never going to be another one. So now they're going to build this out probably to 100 million, 150 million. And then I think they're going to tokenize it on the blockchain because you could never create an ETF with this and then sell shares on the blockchain. And I think that this is where this is going to ultimately go. And you can take this theme and do real estate, collectible cars, cast scotch, whatever. You can even do freaking horses for Belmont or whatever. Like there's seriously anything you can think of. So that's more the 5-10 year play on tokenization. I think stablecoins is obviously first, and then you have tokenization down the road. But Ethereum is going to be the blockchain for it, think of blockchain as an accounting ledger where everything sits, one side balances out. It's really all the blockchain is. So that's my spiel on it and what I think is going to happen. And like I said, if we don't get mass scale adoption with stable coins, I don't know that this is actually going to work. But Ethereum's been around before this has been happening. And I think at some point, this has the ability to be a really good investment. It's just when that some point is, I have no idea. Like I'm buying everything with a 3 to 5 year horizon on it.
Right.
It's not like I see people getting crazy because they think BMNR is going to 100 by the end of the year. I'm like, there's no way to know that.
All right.
There's no way to know that. You can't handicap that. So
I have a 3 to 5 year horizon as well because I'm like, with the amount of money that I have allocated to it, I'm gonna get that money back with cover call premiums anyway. So like sideways, slightly up is
listen,
kind of the dream
sideways
scenario.
right now is great. The question is, does it stay sideways? And right now,
Yeah,
it's a little low for my liking.
yeah,
I need it to be 55 or so before I start running the strat.
yeah.
Because at 55, I'll run it at 63, still generate enough premium to feel good about it and have enough margin out there. Not margins, I'm not on margin, but I'll have enough spread out there where I don't think it's going to move that much in a week type thing. And if it does, it's so far out that it doesn't matter.
Well, that's why I have I didn't want to get into another Palantir situation or Meta where you're selling calls and you're like a dog chasing your tail for a year or two. So I bought I bought the leaps, right? So I bought my participation trophy to the upside. That way I have a license to sell aggressive covered calls. And if they get called away at 75 down the road, I'm ecstatic because I can, repurpose that money elsewhere to something that I understand more. And I took
the one question I have for you is, have you ever seen premiums this freaking crazy?
The miners were similar for a while, like Riot and Marathon and Clean Spark. TSLO at times has crazy premiums like this, but not this consistently. And the weird thing is the IVR rank's not even that high on the actual ticker, but the premiums are. I want to say, if you're like in that 20 delta range, it equates to about 10% a month, which is just absolutely insane, dude.
Nuts.
It's nuts.
Absolutely mind-blowing.
If you're selling, $1 million, if you got $1 million to work with, you're literally doubling that $1 million in 12 to 15 months just selling premium on this thing. So, but I think that's the one thing that I finally feel like I understood with Michael Saylor is a big deal with what he was doing is he was creating volatility. So that helped his buddies, do like all kinds of pair trades and whatnot with the MicroStrategy. And so I feel like these companies, these DATs, if you will, these digital asset treasuries, they're really, really good at creating volatility, and volatility for the options market is everything. It's volatility is viability. So that's why this is probably like a top 20, top 25 traded stock in the entire world or in the entire stock market right now. It is
Yeah,
the volume on this thing is crazy.
it's insane. And well, and that's the other thing. Like from a speculation aspect, this is and this is not how I invest. This is like my one speculative thing I'm willing to do because I do have a bull thesis on Ethereum.
Correct.
But I see that this could get caught up in speculation so hard. And I'll tell you right now, if Ethereum goes to 100 anytime soon, I'm out.
Yeah.
I'm sorry, not Ethereum. If BMNR goes to 100 anytime soon, I'm out. I don't care if it keeps running. Like I will
Well, I
get
can
out.
definitively tell you my shares would be out, but I'll have the courage to ride with the leaps because that's only a
Right.
million. I would lock it. You got to be able to ring the cash register when something makes you that much money that quickly. You got to ring the cash register and then see if there's another opportunity to get back in. And I like to stay where I understand. I say the sphere of competence gives me confidence, but my sphere is real small. That's why you see the same 10 to 15 stocks over and over that I sell puts and calls on, because that's where the homework's been done. That's where I'm comfortable, man. I'm comfortable. I can't, like, I'm already behind on earnings this year. You know what I mean? Like, there's still 3 or 4 companies that I just have not had a chance to listen to the earnings calls.
And I'm going to bring up one comment. Like, CoreWeave, Nebius, and Iron are great too. Like, I'm sure they are. And everybody wants me to get involved in them. I've talked to people about it. I've started to do the research. And you know what? It's hard for me to wrap my brain around it and I understand the thesis, I understand everything about it, but I still see so much value in the Mag 7 X Tesla, so Spectacular 6, that it's hard for me to dump money into those and add positions when I'm just more comfortable with the bigger companies.
Yeah, no, I get it. And then not to mention the Mag 7 or the Spectacular Super 6, whatever you're going to call them, they're trading like meme stocks. The premiums here lately, even like on Google, because I'm running big strangles on I call my big 3, right? Google, Amazon, and
yeah,
Apple.
and look, and Kurt, I know what you mean with the big premiums, and I'm with you because if I bought them, I'd be doing that too.
Yeah,
it's so hard for me to do it. So
these premiums are just nuts. But I'll tell you what, like I'm like extremely bullish on Riot because I felt it, I've touched it, right? I've been there a couple of times. And I feel like they're really going to make this pivot to the data center, the high performance compute, artificial intelligence.
yeah,
But Iron's special, man. Like Iron, like what they got going on is like truly special. The only reason that I did not invest early and I still don't is because they didn't have a Bitcoin hodl. So I was like, so what are you growing, right? Like Robinhood, or like Riot has about 19,200 Bitcoin now on the balance sheet. You know, Marathon's got a lot too, more than them. And then CleanSpark's coming as well. So it was just like, okay, these guys are in an extremely capital intensive business, but what's like your prize at the end of the day? You know, like I see their hodl. And I didn't see a hodl with Iron. So I was like, so what are we working towards? And then obviously they've done like major pivots. They've got a lot of mojo, man. Iron has a lot of mojo. So there's people that have made a ton of money with them. Cypher's another one that's coming. There's a bunch, but I do feel there's probably going to be a lot of mergers and acquisitions here over the next 3 to 4 years in the mining space, and it's going to be fun, man. It's going to be fun times. There's very interesting spaces to keep up with, and now I think these digital asset treasuries are like the new kid in time, right? It's the new space that people. It's like it's all the fuss, right? It's the new pretty girl that came in town. But I went down that rabbit hole, dude, and I can't stop. Like it is so addictive or addicting, whatever the word is. Like I just can't stop seeing more and more use cases for Ethereum, whereas I never saw one use case for Bitcoin. To me, like Bitcoin was just fancy artwork. Like it's just, and you can argue that everything's a greater fool's theory in the stock market, but it's just literally like, it's worked that much because people say so. And the only thing that I really wrapped my mind around was like, oh, there's only going to be 21 million of them. But the majority of them are already produced, and it's going to be harder and harder and harder to grab the next ones. And I don't know. I just feel like you can build something tangible on this Ethereum blockchain. Like I think of like medical records and stuff. Or like, why aren't those on the blockchain? Like, why does my doctor have to go through a bunch of loopholes to find all my medical records? Like, I don't understand why that stuff's just not readily accessible, especially if, like, I remember when my mom, before she passed, every time she'd go into the hospital, like, any medications you're allergic to, and we would get tired of saying she's allergic to penicillin. Like, don't give her penicillin. I'm like, why is that not like common knowledge? Because that information is just not readily accessible. Like they have this thing called the Medical Information Bureau, but it's limited. So I see like a use case for medical records to be like on the blockchain where you can put, little information, and you could be in China, in Asia and Europe, wherever. And if they have to treat you over there, like they know what you're allergic to, all your medical history is like right there in the, in the tip of their fingers, if you will. So I see a huge opportunity there. And as far as it going up and to the right, which is what we all want when we invest in the stock, I have no idea how or why that's going to happen or when it's going to happen. I just feel that it's going to. And I'm one of those guys that if I have a belief, I put my money in. We have to place a calculated bet, right? That's what it is at the end of the day.
I gotcha. Well, I know that you have a date with a very important person. So we're just going to take one question real quick. What is TJ the Real Deal's favorite movie of all time?
That's a really good question. It's a tie. One of them is substantive, and one of them is just, if the movie's on, I'm dropping everything and I'm going to watch that movie.
So you know what? I rank stuff like that too. Like I have my greatest of all time, and then I have my, if it's on, whatever I'm scrolling through, I'm dropping whatever I'm doing.
Yeah. So the one that I have to watch, and I don't care where it is, like it could be, it doesn't matter what scene it is, I'm going to watch it from that point on. Like I don't have to do it from start to finish. But the name of the movie is Jerry Maguire.
Okay.
I feel like I know the movie like cover to cover, dude. There's something about the movie. Maybe it's also because Renee Zellweger went to the University of Texas at Austin, and I'm a graduate from there. So like there's like those ties as well. So Show Me the Money is the movie that I identify with it. It's like this guy had this idea of like, hey, this is what being a sports agent is, and that's not what it has to be. And then he has like this little mentor that he's talking to. And I feel like I've done a lot of self-help books and stuff to try to mold myself into a person that I envision myself to be. It's like what you'll one day be or now becoming. So I could just identify with the character Jerry Maguire. So that's the one. But the one that like really, really, really does it for me is Shawshank Redemption.
Okay.
Like, I just feel like that movie just has everything for me. And I just feel like it was just extremely well made, extremely well acted. And I just love the movie. I just think that it's just a beautifully written and made movie. And it just does. I had to say there's Shawshank. Now I also have like my favorite cult movie. Like a cult one that wasn't real popular when it came out, but afterward, then it has like some of the most popular lines, and people would try to like do their best impersonation. And that's again, if it's on and I got like a little time, I'll at least watch 20 or 30 minutes of it. And that's Scarface. And I, like everybody else, have tried to do like say hello to my little friend and all that stuff. I mean, like Scarface is just one of those movies that I just really enjoy watching it. I prefer it over like the Godfather series, even though the Godfathers they're absolutely amazing. It's the first time I saw a movie, and I felt like the second one was actually better than the first one, and that like never happens in cinematic history. like how does the sequel is never supposed to be better than the original? But yeah, so Scarface is like the cultural phenomenon for me, and then Jerry Maguire's my feel-good movie, if you will, but like the movie that I feel like I could go in front of the room and like make a case as to why I think it's one of the greatest films of all time is Shawshank Redemption.
And Maddie's back.
TJ, how you doing, brother? Good to see you, man.
Brother, you're looking good.
Trying to be like you, man. Every day I'm like, what would TJ do?
So I got a
Yeah.
hot take.
I'm just trying to get healthy, guys. My wife and I are trying to have a child. We're doing
Oh, wow.
Congrats.
Congrats.
IVF and surrogacy. We got 2 embryos that made it through the genetic testing process. So we got a boy and a
That's awesome.
girl. The boy's good, fair, and the girl's fair, fair. So we're going to start with the boy, and if that works or it doesn't work, we're going to try the girl as well. So we're going to either have 1, 2, or none, right? Right
yeah.
now we have none. So hopefully we'll have 2, if not 1, if not none. We're so happy either way. It's all preordained and predestined, we feel. So whatever's going to happen is going to happen. We're determined to live our best life. But my wife really wants this, so I want this for her.
Yeah.
I want this for her. So by default, I want it for us. I just think, I can just see it. She's going to be such a beautiful mom. And I'm like super, super excited about the process. So that's what's going on in my world. Matt, I got to run, brother. I appreciate seeing you. Dude, send me some links, dude. I'd love to come on y'all's channels at times, man.
For sure.
I'm not going live for the public on my channel, but I can hop on y'all's.
For sure. Hey, I think I'm gonna see you at the end of the month. I think.
With Stephanie.
Yeah, the Steph. Yeah.
Super. Yeah, my wife said, "Hey, we're linking up with Steph again," and I don't know. I saw something on one of the credit cards that said Southwest and a hotel snuck in there. So I feel like this is happening for us. We're gonna go to Houston here pretty soon.
Cool. Yeah. I think it's towards the week. I think sometime last couple weeks of November.
Dude, when I see luggage out there and it's time to load it in and head to the airport, I know my wife's serious and I got to stop what I'm doing and get on board. So she's the travel agent of the family, bro. I just
there you go.
Appreciate
Looking forward to seeing you, brother.
Love to come on again. You guys are having me. Y'all have a good one.
You too, man.
Take care, guys.
So Maddie, what's
Hey, man.
going on?
Every day I aspire to be more like you, Steve.
Don't say that. Don't say that.
Pouncer Weekly went well.
Yeah, 300.
Was that what the stock's going to? Is that what you're asking?
I'm asking.
Probably.
All right, cool.
No, I mean, I in selfish fashion, I hope the stock goes down, but so I can buy more. But it's just me.
I mean, listen, I get it. I'm with you.
Yeah.
I'm with you. I'm probably gonna get off. It's already, what time is it? 12.
Not a problem.
Oh, what are you eating right now? You got your cookie out? Are you?
No, I got a mint. Was my chili earlier.
Okay. So the real question is, what type of cookie did you have?
I still haven't had them, actually. I got one I might save for tomorrow. I got a Reese's chunk, and then a is it just chocolate chip? Yeah, I think it inspired me to get a chocolate chip because we were talking about it earlier. So.
I like it.
So, yeah, I did not eat a full meal for dinner. So that was kind of my thought of what a meal would be for substitute. Would be one of those cookies, and yeah, that's pretty much that.
All right. Well, I need to go because I need to sleep so I can freaking write some articles tomorrow. And then
Yeah, you're slacking.
Listen, I gotta try to do 2 or 3 articles this weekend. I got 2 streams this weekend. You know,
Slacking. Yeah, I got one tomorrow, and then I got to get on a jet. So
have a safe trip if I don't talk to you.
thank you, man. Yeah, hopefully I'll see. Are you going to do Pouncer earnings on Monday?
No, I got a very busy day Monday.
Okay. Yeah, I have a very busy all day as well. So I'm trying to figure out, afterwards, do I just go home, nap, and then stream or what? Plus, I'm going to be trying to get acclimated for the week for time difference. So it's going to be
well. Enjoy your tea and crumpets.
Thank you. Much appreciated.
And thank you, everybody, for joining. Please go follow Matt. Please go follow Roy. If TJ's channel's up, go follow TJ. Go follow Amit. Go follow Chris. Go follow Cash Flow Chronicles. And I will see everybody tomorrow night for FinTech, whatever it's called these days. And then Sunday night, I'll do a mixture of Alternative Asset Weekly and stocks and movies and all that stuff. Appreciate everybody being
Get Steve
here.
to 10K. Did you hit 10K yet?
I don't know. We'll get there when we get there.
Okay. You're the man.
Appreciate everybody. Stay out of trouble. Have a great night.
Godspeed.